Good morning, traders. Welcome to NinjaTrader Live. I'm Maggie Lake, filling in for Anthony, who's once again working on the road with me today. Tracy Shuchart, Senior Economist, Craig Shapiro, Senior Macro Strategist, and Jim Cagnina, Senior Market Strategist. Good morning, everybody. How are you?
Good morning, Maggie.
Good
Good morning,
morning.
Tracy. Good morning, Craig.
I'm obviously on the road myself this morning, coming from a different location. But one day, a couple days, what a difference it makes. A big peace rally we had yesterday seems to be sort of holding for now. I'm curious to get all your thoughts. But stock futures are sort of slightly positive to flat. Oil hanging below 100. Shai, what are you tracking in the headlines?
So we have the U.S. is waiting on Iran to respond to its proposal to reopen the Strait of Hormuz. Iran is expected to send a response via Pakistan within the next few days. Just want to note that the strait is still effectively closed. 0 ships have crossed in the last 2 days. We had Maersk reported today. They're kind of viewed as the bellwether for global trade. They're the biggest shipping company in the world. Says that the energy crunch to persist even if Iran peace deal is struck. They said that the oil shock caused by the Iran war will significantly raise costs this quarter and next, and they are going to have to fully seek to pass that on to customers. Quote from the CEO was, "They can understand, even if they don't like it, why we have to do it. It's not something we can just keep absorbing." So expect I am sure that they are not the only ones that are going to have to start passing these costs along to the consumer. So just something to think about as far as inflation expectations. Yesterday, as we thought, looks like Japan did intervene in the markets again. Looks like they used around $30 billion in intervention in the currency, which is about 4.68 trillion yen. And this is kind of based on Bank of Japan's accounts released and money broker forecasts. We usually don't find out if they really did until we can reconcile it within their statements until the next day, but they did intervene yesterday. China's central bank bought the most gold in over a year, with the PBOC rising by 8.1 tons in April. Central banks still buying. Interesting note, the U.S. is now setting records for fertilizer purchases from Russia. In March, the U.S. imported more than $250 million worth of Russian fertilizers, the highest in history of the bilateral trade. This was for the quarter, the total reached $564 million, up 30% year on year. Russian fertilizers remain competitive due to cheap natural gas used in production, which keeps prices lower. But just interesting that it looks like, we're kind of disregarding sanctions all around. We had Jeff Curry, who is my favorite analyst, on Bloomberg earlier with Francine Lacqua. He said that he's never seen anything like this before. Storage tanks for oil, jet fuel, diesel, and gasoline will be running out in Europe in May. And oil storage tanks in the U.S. will run empty somewhere in the July 4th period, which is crazy to think. Markets obviously disregarding this whatsoever. Money markets are seeing the Federal Reserve's holding rates steady through the end of the year. European Central Bank is priced to likely tighten policy as soon as next month, followed by the BOE. And the entire market seems like it's now just one giant gamma squeeze. S&P traded 2.6 trillion notional of calls yesterday, an all-time high. And then moving on to data, this morning at 8:30 a.m., we have non-farm productivity, initial jobless claims, continuing claims, 10 a.m. Eastern, construction spending, 11 a.m. New York Fed, one-year inflation expectations. That'll be important as well. Also, and then at 3 p.m. Eastern, consumer credit.
So there's a lot of interesting threads in there, especially when it comes to the oil and fertilizer markets. Craig, what's your sense? I mean, we've been here before, right? You see this huge move on news reports. I think everyone hopes it's true, but does it feel like it's different this time, or is this kind of a setup for yet another disappointment when it comes to the war being over?
Well, I mean, markets seem to want to move on. Certainly, equity markets have wanted to move on from the war for quite some time. I've been seeing this tech leadership, evince itself and continue. And so I think it's interesting this morning, a little bit of a character change. You're seeing oil pretty soft, gold rally, bonds rally, and stocks are kind of right? I mean, to have oil down 3.5% and have the equity indices flat, I think just kind of suggests, possibly that equities have moved a lot and maybe are, to Tracy's point with this positive gamma, kind of getting exhausted a little bit to the upside here. And so dealers now are buying dips and selling rallies. And so we are kind of in a little bit of this grind up mode, but maybe we've come, too far, too fast. But, as far as the headlines are concerned, Trump has continued to change the deadlines. Earlier in the week, he said we're 2 weeks away. Yesterday, he said we're 1 week away. I mean, who really knows? It seems like we are moving in the direction of, resolution. I think there was an interesting headline out last night that said Saudi had said that the U.S. can no longer use military bases and airspace in order to help, move ships through the region. That was something that the president was trying to put in earlier in the week and then eliminated that plan 24 hours later. So it seems like not everybody in the Middle East is talking, together with the same messaging here. But for now, for equity markets, positive gamma, expiry week next week, earnings have been good. It's going to take a lot of negative news in order to disrupt this train here, for the next little bit. Tomorrow is important, though. It is non-farm payrolls. It seems like we haven't been speaking too much about data for quite some time, but the data it will be important. It'll matter for the Fed. It'll matter for the direction of the economy and how we think about the second half of this year. Expectations are for another decent labor print tomorrow. But if we got kind of outsized movement, either a very strong print or a very weak print, could shake up some of the narrative that we've been seeing.
Yeah, Jim, you were bringing up you got your eye on bonds today, right?
Yeah, I mean, right now, they're moving, in unison with gold. They're both kind of creeping up right now. We're in the middle of a consolidation range that we saw back in April. So, a 3-day rally, but we'll see if it continues. It seems to be slowing down. Christopher in the chat said, it seems like we're still in the third inning. We're always in the third inning. Christopher, I'm in the eighth inning. So just so you know. But stock index futures like the S&P, we're up 7.19% on the calendar year. You annualize that out to midterms, and what we're talking 15%, if that continues. So that's quite a rise. From that peak trough that we had back in, and remember, this is during the war, the end of March, we're up 16.53%. So the equity markets are shrugging everything off. And yeah, it looks like a little bit of a pause today, but it might be just a little bit of a rest, kind of like when you cook a steak, you got to take it out and let it rest for some reason before you cut into it. I don't know why we do that, but same thing here with the S&P.
Yeah, Tracy, so we had this assumption that we had a new chair coming in and we were going to see easing, but to Craig's point about the data, and Jim was mentioning Susan Collins talking this morning, are we looking at a Fed that is going to be as sort of friendly to the market as we think, or is this just a lot of sort of jawboning? How are you thinking about the Fed here, especially because we have non-farm payrolls coming out tomorrow?
Yeah, I think they're a little bit hamstrung right now. And you also have to remember that Warsh will be new. Yes, he's been in the Fed before, but there are still 12 other voters, and he's going to have to rally the troops. And as we hear some of these FOMC members, it sounds like they are erring on the side of caution, and they are not going to jump into a cut anytime soon. And I'm not so sure that war should want to do that either, especially if we keep seeing rising inflation expectations, which we continue to do so. And I continue to think that this has not even begun to hit us yet as far as inflationary pressures are. This is just the beginning. Again, we heard from Maersk this morning that said, all right, well, we can't absorb these costs anymore. We're going to pass this on to consumers. And so I'm sure that they are not the only ones. So I think they're going to be a little bit stuck here with inflation expectations rising. And so far, the labor market looks okay, right? And so those are their two mandates. And I think they're going to be hard pressed to try and think of a reason to cut rates. Also, the economy still looks good on the outset. Underneath, we have problems and some weakness that we are starting to see. But overall, it still looks good. You're going to have to be hard pressed to cut into a good economy, too.
Yeah, I mean, as Craig mentioned, the earnings are have been looking good. I mean, there is a lot of strength. Craig, I'm hearing the worry point for some folks, some analysts and traders, $5 gas, 5% yield. That's like the fives. Obviously, I've been making my way through some airports, jet fuel. I mean, there's a lot of concern about, so gas prices as we're heading into summer are going to crimp you no matter what you do if you're, an American consumer. And then if you're going to try to go on vacation or do anything, which people tend to do in the summer, and you look at those airfares, it's crazy. I mean, is this going to start drift into market psychology, or have we got Main Street over here and the markets in Wall Street over here?
3 words: at some point, right? I mean, so look, we have a very bifurcated economy. We have a very based on companies that are exposed to AI and those that aren't, and then consumers, those that are wealthy with assets and those that are the lower part of the K, right? You have an economy that interest rates are too low for the AI CapEx part of the economy and for wealthy individuals, yet they are too high for many small businesses and for many low-end consumers. Oil prices and energy prices are too low for the AI part of the economy. It's not a restrictive, their ability to spend money. And they are too high for, again, small businesses, consumers, travel, leisure. So that's the dichotomy that you're in right now. And so you have this two-speed economy where interest rates and oil prices are affecting cohorts differently. It really creates to hate to use the old Fed speak, a conundrum for the Fed, right? So there's, what are they going to do if they decide to, act to cut rates to help arrest some of the issues of the lower part of the K? That's just going to lead to higher inflation. If they don't cut rates, then the strain that the lower part of the K-shaped economy feels is only going to get worse. And so they're really in a bind there. One of the tools that Warsh could think about using, and he has spoken about this, is getting more aggressive on the balance sheet, reducing the size of the Fed's balance sheet and maybe cutting rates at the same time. But this is something that's going to take months, if not quarters, to really play out. So no hope near term for that. I was pointing out TSA checkpoints, to your point, Maggie, about travel, are now running down close to 2% year on year. And so you're starting to see that pickup in travel and leisure. We're going to have $5 gasoline by Memorial Day, which is, the start of the driving season. So, $5 gasoline into the summer, travel already slowing. If we got a very strong payroll print on tomorrow, I think we would see a decent sell-off in the bond market here. And maybe that's how you get your 5% yield dynamic here as we move 30-year yields, firmly through 5%. Housing market struggle. And again, those are the types of things that at some point, maybe starts to get pulled forward.
Yeah, no, that's a great point. Buenos dias to someone who just said it. I know Anthony always has his gorgeous little espresso. Meanwhile, I'm in a vat of coffee that I'm going to sip because we need it. It's like, I've got to get more sophisticated. I got to get with Deli's game. Tracy, you I know we're going to be talking to Ronald Smith in a bit, which is going to be great. But I love that you came out and said, we've got all these headlines just to remind everyone the strait's not open. And when you were talking about storage and fertilizer, I know we moved through the headlines really quickly, but those are some really, really important points, I think, when we're watching oil. I mean, if anyone was trading oil and they caught that move down, great, right? And equity's up, but you have to be careful. Can you explain why that storage headline you talked about is so important? Because I mean, you know this
Well,
market better than most of us do. Explain why that matters so much.
yeah, absolutely. Well, you have to remember there are two storage. The U.S. has two storage. There's a strategic petroleum reserve that is technically not supposed to be drawn down unless it's an emergency, but that's a whole other issue. And then you have commercial crude storage. Now, commercial crude storage is drawing down rather quickly because suddenly countries that can't get oil from the Middle East right now are forced to look elsewhere. And we're seeing the largest exports that we have seen ever in history. Last week we had 8.2 million barrels a day of product exports. That is unheard of. I mean, that's the largest number ever, along with elevated crude oil exports, not at the very highest. The week before was the very highest, but we're still very close to that. And so if we start drawing down our storage, that's obviously going to be a problem because you're starting to scrape the bottom of the barrel. And technically speaking, and I won't get too technical, but if you take Cushing storage, for example, which is the actual WTI contract you're trading, but we're talking total commercial crude storage. But just to get an idea of how storage works, Cushing can hold 90 million barrels. You can't fill it all the way up. You need room at the tops of the tanks to move oil back and forth. So technically, it's about 75 million barrels. Now, if you start to get below 20, you cannot remove it because you've technically reached the bottom of the barrel. And so
literally,
that's going to like literally. And so that's obviously going to be a problem. We won't be able to export. And, that would be a problem for domestic use as well. So
yeah, so there's all these hidden pressures that we still don't really see priced in, which is, I think, what people worry about.
Right.
Jim, so we talked about you trading bonds. What's on your radar today? What are you most interested in?
By the way, before I answer that question, I do want to, I looked at the CME Group Fed Funds tool for the first time in forever. We used to look at this thing every 5 minutes. I haven't looked at it for a while. There is no change projected in the Fed funds rate. I think the effective Fed funds rate right now is about 3.62 until a hike is projected in December 2027. I know that's way out and it's probably not going to be that accurate, but it's just crazy. It's totally flatlined. But I think the market today is the same market we've been talking. You got to watch crude oil today. I mean, crude oil is down 4% so far. 69,000, 70,000 contracts traded in the big contract. The micros had 121,000 contracts in it. We're getting close to that $91 level here, and so often in the last couple of weeks, this thing's kind of was driving the bus related to the other asset classes. So I'm keeping an eye on that. RBOB gasoline is highly correlated with that as well. I don't know how correlated it is with real gas at the pump, but it's correlated with crude, and then you have heating oil as well. So that whole energy sector, we'll keep our eye on because down 4% is a big number. So that's kind of what that's on my radar screen, and we're going to be talking about that a little bit later. But while I have your attention, I do also want to let everybody know we have a special thing coming up. We have another arena challenge. I don't know if anyone has participated in these arena challenges, but this one is going to be really good. This is it's $250,000 in cash prizes. Now these are cash prizes, right? These aren't other weird prizes that other places hand out. So it's qualifying round 1, 2, and 3. So Tuesday, May 19th. Tuesday, May 26th, and Tuesday, June 2nd are the qualifying rounds. And then the final round, if you make it that far, is on the 9th of June. And there's prizes, and there's cash awards given up in the qualifying rounds as well as the final rounds. Link is in the chat, everybody. A lot of fun. It's free to do. You never know. So I'd pop in there and check it out.
I love it. I was wondering I know some of our traders trade everything, and I was wondering if that gave them an advantage. last time. You guys told me Tanya walked away with the prize last time, which I love. So that's going to be really fun. Get in there. Get in there, everybody. Take advantage. By the way, I think we got to have new Ninja swag coming because Anthony is in the chat offering to provide little espresso cups for us. To convert me at least. And we have some hands raised for some. So I don't know. I'm starting a campaign, everyone. Get in there. Tell Anthony to get us some espresso, nice espresso cups, so we can look civilized and not like heathens. Okay, we're very close. We got some data that's going to be coming out pretty soon. Final thoughts before we get to that. Craig, what are you going to be tracking today? What's going to be most important for you?
Yeah, Maggie, we talk about initial job claims here every Thursday and how it's not that important because, an increasing part of the gig economy doesn't file for unemployment claims. But last week was a historic low in unemployment claims. We haven't seen levels that low for I don't even know how long. And so it will be interesting to see if there are revisions and if that was a one-off type thing. So keep an eye on that release at 8:30. But, tomorrow, 8:30 payrolls. I think it's going to be important. Do we get something that is outsized versus what is expected, which is, let's say, in the 50 to 75,000, payroll range expected. Was a big month last month. The ADP number came in a little bit lighter yesterday at 102 versus 120 expected, or 109 versus 120 expected. So we'll see. I think labor momentum is important. And if we start to have an environment where inflation is elevated and the labor market is fine, to Jim's point, we're going to be pushing out the Fed for quite some time. There's going to be no momentum for Warsh to cut rates anytime soon. On the flip side, another very weak payroll print after February's print was weak. If March was good, April was weak. It will bring back renewed fears about the pace of the labor market trajectory here. There's been plenty of layoffs announced over the course of the last several weeks. Meta, Microsoft, Coinbase, Block, PayPal, Shopify, a lot of announcements here for layoffs. Many are AI related. So if that momentum continues to pick up steam, and we see that tomorrow, it could have an outsized impact on markets.
Yeah, it does seem, I feel like the labor market has been so strong, and yet we all feel like there's a nervousness about jobs out there, and you're not seeing any hiring really. So it kind of feels like this weird disconnect because we have had all of these headlines. By the way, speaking of headlines, I don't know if you saw the comments from Anthropic's CEO. They're incredible that the company demand is like 80-fold growth. They can't even keep up with it because they just don't have the compute power. I mean, I think it's going to just all of those kinds of headlines are just going to reinforce what this means for the labor market. So I think the labor market is going to be a real talking point here. And I'm really curious to see how bonds and how maybe Fed officials start to respond to that. Fantastic stuff. Okay, well, you know what time it is, folks. It is time for the Edge Report. Take it away, Jim.
All right. Well, we've neglected the Dow futures in recent Edge reports. So let's talk about this here. We got this V-shaped recovery kind of like pattern happening right now. And this market hasn't made an all-time high recently. And I marked that off. That's at 56.11 from February 10th. We're driving up to that level, but it's just kind of lagging behind the other stock index futures from that, I don't know, historic milestone, I guess you can call it. Moving averages are all sloping up, though, pretty nicely here. That 150-day, forget about it, in the rearview mirror. You could argue, well, RSI has been overbought for a while, but it could stay overbought for a long period of time before it's a good signal to try to get short. Right now, kind of a little bit of pause at the top of yesterday's big green candle, just kind of hovering around 51.19. Eyeing that 611 level. Intraday, kind of nice volume profile, actually, kind of bell-shaped curve. Now, remember, when you're trading the Dow or the micro Dow, sometimes the bid-ask spread gets a little thin. So make sure you're trying to enter on limit orders and exit on limit orders the best you can. I understand sometimes you got to put a stop market in, but keep that in mind as well. And let the market come to you. So kind of a nice point of control sitting right by the session VWAP right here. We're kind of, bouncing off previous sessions highs right now and maybe driving back down toward that VWAP. And that's at 50.95. Come on, Jim, get your glasses fixed. Above that, yeah, we have some Mohawk wicks up here, I like to call it, and we have probably a nice level of resistance at 501.72. On the downside, bottom of the value area is in target for me at 50.047. Globex open a little bit lower than that. So we'll keep monitoring the Dow. We'll see if it could make those all-time highs or not. The other market I'm looking at also that I want to talk about is Dr. Copper. Dr. Copper has been an interesting market, to say the least. Let me pop up a daily chart first. So we're kind of popping up here, right? We took out this high that we saw back on the end of February. That's 141. Come on, Jim. And we have continuation buying going on as well. Moving averages are arcing up nicely. RSI isn't overbought. It's only around 61. It's arcing up nicely here. So this has got a lot of upward momentum to it. We have a couple target wicks way up here, 6.387. That's from the end of January. And then that really crazy wild wick up here is 6.583. So there are some nice targets on the upside for Dr. Copper. And just to kind of drill in a little bit to an intraday chart, this is a 10-minute chart. Let me get my axis straightened away here so we can see this pretty good. The volume profile is not as good as the Dow's, but it's okay. We have a nice point of control, kind of pretty much in the middle of action right now, at 6.216. And by the way, there are micros in this market too. They're nice market to consider. As a matter of fact, they've done 5,000 contracts so far. I know it doesn't seem like a lot, but it's still a pretty good market. We have price separation above VWAP right now, and then we definitely have a top here. An overnight high is a nice target. Above that, you got that JAX3 at 6.25. And a lot of blank space above it. And so you get all the way up to that one day. Well, R1 is important as well, 6.2795, and then that one day max up at 6.290. Should things break bad and VWAP fails us, we've got a JAX2 level at 6.2, and then 0 DTE put support down at 6.17. Let's just shoot over to bonds really quickly here. Just take a look at a daily chart. A daily chart's where all the action is. We're right back in the consolidation range, as I talked about. We're back above that September 25th swing low, 113.01. That was kind of an important level. Right now, we're just trapped between that 50 and the 21 EMA right now, and we might remain there for the day. I don't know. But, a 114 handle would be a milestone if we can get above that. We'll see if we could do that or not. Cash yields are 4.922 for the 30-year when I logged in this morning. 10-year was at 4.328, and the 2-year was 3.847. Checking out an intraday chart. This is very interesting. So, there's not a lot of ticks here in this move, right? Point of control is competing between 28 and 29, and you can see it shifting around as we speak. Previous session's highs is where we're at. Top of the value area is at 114.01. We did trade above that 114, and then R1 is up here. Should we catch a bid here at 05? One day max all the way up here at 08. On the downside, well, Globex open is what I'm looking for on the downside, and then JAX1 at 113 and 16/30 seconds. That is this morning's Edge Report. Let's go back to the panel.
And the panel is here with us because we're waiting for the weekly jobless claims. Shai's going to bring us the numbers when they cross. Craig, it feels, are we in a position now, given everything we talked about this morning, where it might be bonds and oil that are leading the market? I mean, clearly still oil, but and stock markets are just maybe range bound.
Yeah, I think that's right. I mean, again, we're in the week before expiry now, significantly positive gamma regime, one of the biggest ever, is my understanding. And so dealers are, really buying every dip and selling every rally, which creates that kind of grind environment and means that the bar for news to matter to the equity market now is extremely high. We need to see accelerating news, consistently for the next, 48 hours and over the weekend into next week here too. So you're right. I think that's why we're seeing kind of outsized reactions in precious metals today and in oil today. And equities are kind of just doing nothing. Under the hood, there'll be, various sectors that are moving in one direction or other based on earnings. CoreWeave reports after the close. That'll be interesting for the AI compute story. Pharm was out overnight. That stock's trading weaker this morning. McDonald's out this morning. So I think Airbnb reports today too. So, a lot of back and forth on, various dynamics of the economy. But, expect the indices here to grind unless we get some, really outsized news. It would have to come from the war, and probably would have to be, a fairly negative, report coming out of the Middle East to really shake things up.
Yeah. While we wait for that headline just out, speaking of earnings, and this is sort of interesting. Whirlpool says Iran war causing recession level industry decline. The shares are down 20%. Nobody buying, I guess, appliances, which is funny when you flip and look at other parts of the economy, which look like they're holding up really well. So I think someone in the chat said they love the word bifurcated because we hear it all the time, but it's true.
Sorry, Maggie. Jobless claims,
ahead.
initial jobless claims came in at 200,000. Prior was 189,000. Survey was 205. And then continuing claims came in lower than prior and lower than survey at 1.766 million. So not market moving,
No.
certainly.
I assume that's what you're seeing, Jim, right? Nothing?
Yeah, I mean, nothing's budged. I mean, the S&P is still at 7,400. Bonds are still right in the middle of the pack at that point of control. I just described it at 113.28, no movement.
Jim, does it seem like we're going to get a breakout? I mean, we were talking about, Craig talking about equities potentially just grinding in this range. Does it look like bonds have a chance to break out of the range they've been in? Because they've been in a pretty tight range too, right?
Yeah, I mean, this is, the third day of green candles in a row, and we're up again. There could be a pause in this market as well today, to be honest with you. We're seeing it in equities. There could be a pause in this market as well. I mean, we tried to reach up into that 114 handle. Sellers brought us right back down, during the London initial balance. And right now, this point of control is pretty dominant and pretty sticky. If you could just look at the histogram bars here, these two really big histogram bars, this is kind of where everyone's pricing bonds right now. The VWAP is straight across. I mean, there's nothing cooking here. This is kind of a sideways range bound, at least morning. We'll see if something breaks out, but I don't have a lot of high hopes.
We wait and we watch. All right, Jim and Craig, thank you so much. Appreciate it. We'll see you in the chat.
Thanks.
All right, Trace and I are just about to talk to Ronald Smith, but let's take a look at the lineup today. In a moment, we will be bringing in Ronald Smith at 8:45. Pharm will be here for Tape Talk. We're going to trade the open today with Jack and Nick. Midday markets are with XY and Salma, and trade the close is with Joey, Leo, and Chris. Okay. Let's welcome Ronald Smith, founding partner of Emerging Markets Oil and Gas Consulting Partners. Hi, Ronald. Thanks so much for being with us.
Hello, Maggie. Hello, everybody. Good to be with you. Good morning.
Good morning. Ronald, let's start. I kind of want to start broad-based and get your opinion on the situation in the Strait of Hormuz. And do you think that the market is underestimating the risk? I mean, the strait's still not open, or is it just looking past and thinking we're going to get a deal and everything's fine?
Yeah, I think, first off, I'm like a number of other observers out there who are wondering why oil prices aren't far, far higher. Because, I mean, obviously, this is a much bigger disruption than we ever had in 22 at the start of the Ukraine crisis. And yet oil prices just they've gone up some, but now they're coming back off. And personally, I just think it's how would you say, the very effectively used jawboning, in that, the traders are probably just scared to death to take any kind of, serious long position in oil and gas or in oil, because, a tweet could come out of the White House and just kill you in a few minutes, unless you've really got a lot of, stomach for a huge amount of volatility. It's kind of tough to go out there and buy oil if it gets up to 110 or something like that and stick with it, saying it's got to go to 140, because you could get blindsided in just literally in 30 seconds. And so I think that's the reason it hasn't gone higher. It's going to continue to grind higher if we don't get the Gulf open again pretty soon. I mean, you've seen all the numbers. We're 1 billion barrels underwater already. We're down, and who knows what actual demand is, but we're probably losing 10 million barrels a day on that anyway, going forward. We've got constraints in Russian exports and production. They could be doing another 700,000 barrels a day, except for various problems with drones and ports and pipelines and things like that. There's Again, we don't know much on the demand side, but definitely on the supply side, we've seen a huge amount of contraction that is not going to get unwound overnight. I mean, I know it was Iraq that came out in early April, and said we can re-ramp to 100% production in 7 days. Well, maybe they can in their particular fields. I have doubts, but maybe they can. Other producers in the region, I'm pretty sure, cannot. So even if they open it tomorrow and get all the ships unstuck tomorrow, you're still going to have it, I'd say, at least 2 to 3 months of how would you say, underwater production out of the GCC countries, just because of the geology, that they have to go back in and rework wells. And they have to drill some wells, re-drill some wells to get their production back up to where they were on February 27th. So yeah, I think it's just the nature of the trading environment that's not allowing the what should be a higher price to get fully priced in.
And then I had another question. We know that UAE just left OPEC.
Yeah.
I assume they think that they will be better off and can produce more without being under those constraints. We did immediately see many countries, including Russia, Kazakhstan, all said they were definitely not leaving. But what are your thoughts on UAE leaving, and do you see other countries leaving? I know you wrote something on this, so curious as your thoughts to what that looks like.
Yeah, I think the UAE may prove to be something of a unicorn. We can possibly put Venezuela into that same camp, but here it comes back to that idea that we've got probably, if everything opens up tomorrow, we've probably got 1.5 2 years of a relatively bullish oil market. Just because it's going to take time we don't have to rebuild the entire billion barrels of production that's lost, but at least 700 million barrels of stocks need to be rebuilt. That's going to take a while. So prices are going to be relatively robust. Everybody in OPEC Plus, as soon as they can, will be allowed to produce at maximum without any real problem. So after 18 to 24 months, if the market is back to an oversupplied situation, then we may have to come in and talk about quotas again and things like that. So if you're Venezuela, there's an immense amount of investment is going to have to happen. It looks like it's going to happen now, but by all accounts, it's going to take years for them to get up back to their 3 million barrels a day that they used to do. And that's their baseline left over from, it's 1.5, left over from 2018. Sorry, 3, whatever. It's going to take them time to get back. By the time they get back, there'll be time to discuss it. There's no reason for them to leave now. Not Venezuela, but Kazakhstan, similar situation. They've actually expanded substantially last year their capacity with the Tengiz field, and we're running well over their OPEC plus quota. But their new production is in line with their baseline production assumption in OPEC. So there's no OPEC plus. So there's no need for them to go back and go through a renegotiation unless they want to expand beyond this level. They're better off being inside the organization than outside. And Russia, immediately Putin the government here came out and said, we are not going to be pulling out. We're in it. That's precisely in line with what I would have expected. First off, Russia can grow production long term. They have a massive amount of reserves, but the oil is not that easy anymore. They probably have 700,000 barrels a day of idle capacity right now at the wellhead. The constraint isn't the wellhead. The constraint is the export ports and the logistics at the current moment. So assuming we can also get not just the Iran crisis wrapped up, but the Ukrainian crisis wrapped up, then they could add another 700,000 barrels a day, roughly, in the course of, say, the next 6-8 months. Beyond that, they can grow, but it'll take a long time and a lot of investment. It'll be like 1% per year if they're doing it well. So that is not the type of numbers you need to encourage you to get out of the cartel, especially if you're a very large player like Russia. If Russia exits, OPEC Plus probably falls apart. And so it's very hard for them to go out and say, hey, we're going to raise production, and OPEC Plus will continue to operate in our absence, and we'll get to kind of free ride on the price support. The UAE can do that. It's a major producer, yes, but it's probably not going to bring down OPEC Plus. These other countries that might be considering it, the stay-go calculus that they have is probably almost certainly pointing to them to stay at least for the next 18 to 24 months.
Ronald, what I think your point about the headline risk and that is what is keeping a lot of people worried or nervous about taking a bigger position or chasing oil higher. But what do you think the appropriate range should be based on everything? And Tracy's been talking about this as well, based on the major disruptions and the time that you're talking about to repair. if you take the headlines out of the factor, where do you think oil should be trading? And is that enough to encourage the majors an investment in that area? Because it seems like those capital flows are also nervous about what happens given the uncertainty coming from policy and geopolitics.
Yeah, I mean, it's personally, I think if you're going to get demand down globally by 8 to 10 million barrels a day, you probably need to be at least 150. And in reality, we're seeing that in places, right? I mean, diesel in places, cash prices are over 200. We have jet fuel that's over 200. I've seen quotes, but it's also really depends on where you are. It varies widely all over the globe. So I think in crude, if you're going to pick one single global number, it needs to be 150 plus, 170 maybe, in order to get demand down by the amount needed to balance everything. And obviously, you can come up a bit short of that if you assume that the strait's going to come open soon, and production may not bounce back immediately, but you don't have to no longer plug an 8 or 10 million barrel a day hole, but only a 5 million barrel a day hole. Then prices can be a little bit lower. And in terms of the investment needed to start bringing on more production, the only plays out there that have that short cycle really is the shale plays out in West Texas, well, or anywhere else in the U.S. But if it's offshore, it's a 5-year project to bring something online. If it's an extension from an existing field, maybe 3 years, but that's really pushing it. And in 3 years, who knows what the price is going to be? It's probably not going to be 150. I just don't see companies rushing out to changing their investment cycle in order to rush to try to take advantage of this, because it's just really hard to do in terms of the timing.
Absolutely. And what are we to assume? There was a question from the audience. What should oil prices be if the war hadn't happened? That was a question from our audience, actually, or from our chat. Would we still be at 60? Or 65 where we were?
Yeah, I'm trying to remember what prices were on February 27th. We were at 60 and going down the last time I looked. And with, the general opinion, I think, was 3 to 3.5 million barrels a day of oversupply. And OPEC plus apparently, going to add another 100 and something thousand barrels a day every month until they got all the voluntary cuts back off. We were going down. I think 60 would have been one of the best cases, and 55 or 50 was probably more likely outcome in that situation. As of today, as of summer of 26.
Yeah, Ronald, we have some people talking about the processes and refining. Is the issue now the greater threat or the issue going to be the supply itself, or is it the delivery and the we know obviously the Strait, but we've had pipelines damaged. Where's the real source of the problem, or is it everything?
I think the answer is it's going to hurt in our everything, because the most obvious is just purely the crude coming out of the Gulf, but also there's a lot of refining in that area. We've got refineries that have been damaged. I think we're going to have a significant problem just with pure logistics. I think a lot of the ships are going to be in the wrong place at the wrong time. They're right now. You have to send your ships to the U.S. to try to pick up anything you can out of storage and then get it to Asia. If the Gulf suddenly opens up tomorrow afternoon, it's going to take them weeks to finish that trip before they can get back to the Gulf and pick things up. Obviously, there's some trapped ships inside the Gulf that would come out with crude in pretty short order, and you would have one surge, but behind it, you would probably have another gap. So I think they're going to find all sorts of problems scattered throughout the global economy over the next, 6 to 18 months and some of them probably nobody's considering right now, in all honesty.
That's a great point. Tracy, can you squeeze a quick one in?
Yeah, actually, you brought up the U.S. What's interesting, I don't know if you saw, Jeff Curry was just on Bloomberg. And he was saying he expects storage to run out in May in Europe and in the U.S. by, July 4th, around that area. If nothing changes, all things the same. What are your thoughts? I mean, how big of a deal is that?
Sounds plausible. Yeah, I mean, it sounds plausible. Obviously, 8 to 10 million barrels a day globally, you're going to run everything down pretty quickly, wherever you can find it. And I know that it's being played up as great. The U.S. is exporting at these great levels. Yes, but it's not exporting out of current production. It's exporting out of storage, and that can only last you so long. And I think it also means that the U.S. has been relatively insulated at the pump from this whole thing. If you look at the absolute prices of gasoline and diesel, yes, they're high, but they're about the same as they were at the peak in 2022. And that's before you add in a little bit of inflation. So high, yes, but not extraordinarily, not unprecedentedly high in real terms. But if you deplete most of the storage, both crude and diesel and gas and jet in the U.S., then that shortfall globally is going to start affecting U.S. prices, and they're going to climb.
Ronald, so great to have you here today. Somebody in the chat just said Ronald is incredible, and we agree. So it's so great to get your assessment. Especially when we see these prices moving lower, it's a good reality check for all of the issues that you just laid out. So thank you so much for your time today. Appreciate it.
Anytime. Thanks for having me on. Thank you.
So good. Tracy, the point about just the ships being in the wrong spot. I mean, I know you've been flagging this, but it is incredible it's like the game of Risk, right? All the pieces are not where they're supposed to be.
Yeah, 100%. And you have to add on now, if, other countries are buying from the U.S. instead of the Middle East, particularly Asian countries, that trip to the U.S. is a lot longer as well. So you're adding on days to that journey.
Yeah, I know. And again, this is why, we ask you all the time, because I think you've been great about giving us that reality check. And this idea that it seems fine if you're in the US, but there's this sort of gap and wave coming where we are going to feel it too. I think that's a shock and people aren't ready for it. Some folks in the chat just saying that their gas jumped from like 3 to 4. So I think it's starting to accelerate and feed through, but that's going to be a game changer, I think, for sentiment. Such a good conversation. I love that. All right, Shai, have a great day. We'll see you in the chat. Thanks so much.
All right. Thanks.
Loved Ronald. He was incredible. Okay. You know what it is? Time for Tape Talk with Pharm. Hey there, Pharm. How's it going?
Morning, Maggie. Morning, chat. I'm doing well. How about yourself?
I'm doing okay. I'm sitting in Florida today, and someone just told me that there's a tornado warning soon. So I'm fine for now, I guess. I don't think it's going to come near us, but everything seems extreme now, Pharm. I don't know. What are you watching today? What's happening?
Well, I mean, it looks like it's shaping up to be a boring day, but I'm also going to my kids' kindergarten graduation. So, when I'm not at the desk, usually things get a little bit wild. So maybe we'll be lucky. But definitely interesting to see the continued weakness in oil based off of some of these headlines. They've done a good job. They've really I feel like the administration has taken some notes out of the playbook of the BOJ, right? With just yell at it and then maybe it'll behave. At some point, I mean, we know what happens with them. Traders just don't care what they say until they're the fifth iteration of watching extraordinarily, very closely movements in FX, right? So yeah, it feels like at some point it's going to become some of that, and there's going to be a lot of traders trading off of inside information that are going to be really sad that it's not working out. And that would just be a shame, right? If they took a position based on, some news potentially coming out and then they just got absolutely bagged, be a shame. But anyways, it's weak and we'll look at it in a minute. I figured it was worth recapping yesterday's a little bit because we could open on a true gap up again. Remember, that would be above the prior day's high. And so we talked about the Pharm zone, I think we've decided to call it.
Yeah.
The range of the first 5 minutes. So we can just look back at yesterday and how that played out, right? So we have our first 5-minute bar here at 9:30. We promptly traded above it, found some sellers, pulled back into the range of the first 5. And then what's important is that the next test lower, I mean, we didn't even make it to the open, right? I mean, couldn't get past the open, let alone the range of this first 5 minutes. So for me, bias is long. Which is nice in this case because that aligns with broader bias in this market. We've been in a very clear and obvious uptrend. So to me, it's just kind of hands off shorts. So what you would look for then in to potentially get short, right, would just flip this in reverse, right? So you might have a solid body red candle with an upper wick that never trades above the open and never trades above the high. And that then would look like a pullback to prior day high. So some of these simple little tricks can tend to keep you out of trouble. I know sometimes if you miss the dip opportunity, which like last night was, not last night, the night before, right? I mean, we had rallied quite a bit into the open. So it's one of those situations often as a trader where you're like, well, I missed the dip buy, so I guess I better short it, right? and it ends very, very poorly. We've all been there. So again, that's just kind of just a little trick that I use to manage bias early on. NQ did the same exact thing, came back for an open back test, and that was the buy. So both ES and NQ, if you took that open back test once it was reactive, you're in for the day, and you just ride it, let it grind without you. So again, before zooming out, important to note that because here we are, we're trading, at least as of now, above yesterday's high. Now, obviously, a very different gap up than yesterday was. Yesterday was an absolutely massive gap up. This one, thus far, anyways, potentially a gap for ants. 73.90 yesterday spike base, so we did spike up into the close, so that's just making a new high in the last 30 minutes. Wasn't a particularly impressive spike, but we did. You can see that proof supportive. Once again, we've bought first support overnight, and so I bring this up because again, this is even though it's different from yesterday and then it's not a huge gap up, if you missed your opportunity to buy support, you could find yourself in trouble if this ends up being a gap up and go. Now, we haven't really convincingly pulled away from yesterday's high just yet. So again, this is probably going to play very, very differently than yesterday. If we trade both sides of the Pharm zone, then you have kind of more decisions to make. It looks like balance, and it could go either way, at least initially. But certainly broadly, both should be favored. Zooming out, tier 30, you can see that once again, we have value gapping higher on the week. So there's nothing bearish there. We have arrived at, again, some major extensions that we were approaching really all week. It doesn't necessarily mean it's a decent idea to blindly short, but I do feel like it's probably time for caution. I hadn't really, being intimate with the tape, I hadn't really gotten any feeling of any kind of impending weakness. Sometimes you can sniff it out when you're really in there. Yesterday was the first time it really felt like the offer had just vacated. Sellers were just like, whatever. And the only sell was coming from dealers, right? Game of banana vanna nonsense against buyers. And so they were just kind of letting buyers run with it. And that's usually the first thing that happens because it must happen in order for buyers to exhaust out. But, for a swing high to form at all-time highs or a top, as, we like to call it, it doesn't form because sellers start selling. It forms because buyers are done buying. And we clearly have not gotten there yet, right? So, I'm a little bit cautious up here and just aware that, we could be getting there. But again, it was literally first inklings yesterday. So again, value gapping higher. We've got yesterday's low way down here in the basement. We're not even close to bringing the daily to balance. So that's kind of the big picture on ES. NQ is, pretty much the same, right? Value again, gapping well higher relative to last week. Just an absolutely insane grind. Had to add weekly levels again for the third time. And I think that should be telling. I don't want to, read into it too much, but in 3 years, I think one time we had closed a week above my last weekly level, which is well more than a full weekly straddle. And so we've now traded above, usually 1.5 to 2 times a weekly straddle anyways, 3 times. So it's getting pretty wild out there, right? But again, bulls very much in full control. NQ didn't even quite make it back to first support. It also had a spike yesterday. So the base of the spike was 28,700. Yesterday's cash hours high was 726. And so it has struggled with this 800, 870. This is where it really gets into kind of, for me, a major extension. 28.8, I would say, up to 29,000. Gets into some significant confluence. So again, just a little bit careful there. But this is a situation where, if we pull back at the open, we fail a true gap up again, 40 minutes or 35 minutes to go. We may not even open above 726 and 96 on ES. But if we do, I can see a situation where we pull back into yesterday's range and maybe it just sweeps out this overnight low into the 605 to 623 spot. And then if it just ends up being played as a look, low, and fail of the overnight low, I think that's a nice long, at least back up to 700 to 726. So that's something I look for just because that first support intraday has not been tested yet. I would just be aware, again, I feel like people lose the most money on potential trend change days, if that makes sense, right? Where it's been up only, up only, up only, just buy the dip, buy the dip, buy the dip. And then there's a day where it's just like, it doesn't work, right? I mean, even just the other day, we had like one day where we lost like a couple of minor supports and people were just getting wrecked out there, which is wild. And so I think you just have to watch for that. What's going to happen when this is ready to see a regime change is that, I mean, levels are just going to be lost very quickly that you would not have expected. So I would just say like bias is buy the dip, and we have done that overnight. Again, we held first support on ES. And so if and when we get that day where it's like all of a sudden buy the dip's not working, like just please don't blow up your account just trying over and over and over again. You're going to have to wait for sellers to gas out because they will, and the dip will be bought. But it just requires a little bit more patience, I would say. So that's kind of the general look on ES and NQ. Again, like if this 75 to 77 is lost, I think there's potential for, just call it 55 to 57. Basically this pullback low. And if we do get there, I mean, I'd be mindful of this high volume node from yesterday and this weekly 65 to 69 level, but it's reasonable if it's trapped below 75 to 77, it's coming back to 55. Give or take, there is some demand sitting below this 55. So we could come through here. We could look weak. It could look terrible. Punch through this 55, this pullback low, and then reclaim and go. So like until or unless we're making meaningful traction below a prior day low, buyers they're going to step in at some point. And the fact that we've traded up here mostly overnight is reasonably constructive. You can see on the session, we're overlapping value higher relative to yesterday. A lot of action above yesterday's high. And so it's a little bit further to go in a positive gamma environment, even if sellers do step in, right? So if they just do start cracking levels, I mean, I would just say be patient and wait for that opportunity because they will gas out. And you're going to have dealers buying with you on that dip once it finally settles in. Let's look over at crude real quick as it's been getting stepped on a bit.
Yeah, while you do that, Pharm, someone's saying oil interesting at $90 even.
Yeah, I really liked this spot right at 88.69 that held perfectly because it's a meme, so it's going to respond to those kinds of levels. Obviously would have worked for a nice long, but again, still rolling over and getting stepped on. I think losing that gets a little bit iffy. You're certainly getting a rotation back down towards 85.5, let's say, to 85.80. You still have this open gap here as well. So it's like when you start to see downward traction and pressure, particularly through this low, you start to kind of look at that gap and you're like, they're probably going to fill that, aren't they? So I mean, it's kind of crazy how much they've been able to successfully beat up on crude here, given what's going on. So, I do like it. I would look to see if they can get through this low or not. It is going to need back above, I mean, probably at this point, even 94 is not even necessarily this level that I've been using for ages. Probably back over 94s with a clear base, but at least this 93.07 to find some strength. But it's been a great trading vehicle either way. I would say that like crude, really more so than NQ and ES really has been respecting levels where it should. I mean, the headlines always seem to magically come out like at a major resistance or support, something like that. So it's been a good trade. And so, again, it feels like equities could be boring today. But if I'm off the desk, spicy things tend to happen. So true gap up would be trade one if it holds above this 96 to 99, let's say. It was 95.75 was yesterday's high. That's just going to be a long. I'm looking for 28 to 32. And then ultimately, if we really get silly, probably not in one day, but maybe 65 to 69. NQ, again, these are really really kind of a dangerous area. So you're going to want to see clean traction above that overnight high on any kind of rip higher. But it is broadly constructive, holding above this 700 to 726. You can look for longs. Again, as long as the prior day's high holds, if we get some kind of pullback at the open, you want to see them lift the overnight high comfortably. And then from there, it's just, it's a little bit more price discovery. Same deal. Like I said, I'd buy the dip. If the 605, 623 holds, producing a look below and fail the overnight low. If that is lost, back to 526, 543, completely reasonable. And I still would very much expect to find dip buyers down here in these 500s. There was a fairly decent seller at 500 yesterday. But again, you look back for the 5 minute, right? So there's a low of the first 5. We come back, open back test, holds this weekly level, and then that guy gets ass blasted. So you can see here, pop seller turned into dip buyer, right? So we've already supported that area once. I wouldn't be that surprised even if we came down into this range below 450s and found a bid again. Again, so like same type of deal. Like sellers are going, if they come in at all, they're going to gas out at some point, barring like some wild, crazy headline, because they're selling into a positive gamma environment. Dip buyers are going to step in at some point. So if we do start cracking levels, be very careful. You're not over trading. But at the same time, the dip's going to get bought at some point.
Yeah. But your point about being patient is amazing. And it is tough when you see that happen. And people, keep trying to get in there. So be patient. That's Pharm's advice today. Pharm, have a wonderful time at your graduation. It's going to be so fun. There's nothing cuter than kindergarten graduation.
Absolutely right. You have a great day as well.
Thanks so much. Hey, just a couple of headlines I want to bring you all up to date on before we get to the guys. Interestingly, we were just talking about whether equities are kind of going to sit here and maybe grind a little bit in a range. Paul Tudor Jones out saying the AI bull market has another year or two to run. So take that as you will. And then Shai pointing out that McDonald's is warning, although they did well with earnings, that they're warning moving forward, they're expecting weakness because of high gas prices. So that's sort of interesting. But we have a mildly positive open for futures and downward pressure on oil. So let's get to it. It's time to trade the open with Jack and Nick. Hello, fellas. How are you doing today?
Good morning.
Good morning.
Jack, oh my gosh, you're in your McDonald's kit. That is amazing.
Yeah, I'm bringing in the golden arches today because I am long gold.
Well, hey, it looks like things are looking good so far for you because there's and Shai had a great headline. China bought the most ever, again, huge amount of gold last month. So they've been in there buying as well. So that's fantastic. Nick, what are you looking at?
Well, the silliness of the week by week volume structure here in equities more than anything else. I keep telling Jack I'm going to jump into crude or gold, but every time I say I'm going to do that, I feel like equities are just going to finally make a move that isn't just up and to the right and actually give us kind of a two-way trade. But for me, what I've been kind of saying all week is you really just got to find a pullback to get long in the structure for the last couple of weeks. Like that's all you got to do. And it's worked and it's going to keep working until it doesn't. So until that regime kind of stops and breaks and changes, that's been my plan. Some scalps to the short side and then looking for a decent long that I can hold for hopefully the rest of the session.
Fantastic stuff. I know you guys have been participating in the arena competitions. How's that been? Jack, I put my money on you last time because you do trade everything, just so you know.
Yeah. Well, I recommended, so all of the products, the last one I was in, there's like 5 products, but basically the notional value equivalent was like, 10 standard deviation between some of the micros and some of the NQ and ES. So I said if they made it equal value, which I think they've done in this, it makes it a little more interesting to trade all of the products. Otherwise, there's no point in trading an MCL, 3MCL when you can trade, 2NQ. The value of those contracts is completely different. But I'm excited for this one. I'm in round 2, and everybody should sign up for it.
Awesome stuff. It's going to be really fun. All right, guys, I'm going to let you get to it. Enjoy your day. Good luck out there.
Thank you.
Thank you. All right.
I just got short oil.
You know, I was actually looking at that as I was kind of getting to my desk, but I was like, there's no rush. And just see if we can find a decent spot, maybe in like the 92s to reoffer 92.20s. But yeah, this is kind of a nasty overnight session in crude.
Yeah, that failure of that consolidation at the end of the day. Yeah, yesterday when I was on, I was like, if we break down towards 92 is literally I think what I said, and I'd sell that next spot. But I was unfortunately sleeping at 4 o'clock in the morning, so I didn't get that entry. But yeah, this is just the next kind of level for me if we're going to continue down aggressively. I like shorts down in through the prior day low, maybe in like 87.25. I don't know if that's going to happen from here or not, but I'm going to take some first targets and then just hopefully reduce the risk on the position. And then just gold's been focused for me all week.
Yeah, you had a very nice micro gold long.
Yeah, so I've just been sizing up through this. Very rarely do I like see a move. The way we came out of the low on Monday and the position of which it came for gave me like really good confidence in that long trend. And basically last night, I started off with 10 contracts, MGC, and then just added into what was 178 point candle. And then I just had one move that I wanted to get long overnight and got long that, and looking for just a little bit higher here than the current high, which is always a bad position to be in because we came about, I think the high is like 3 points away from where I had my limit originally. So if we hold this low though and can push up through the overnight high, I'm going to give it a little time to run because my eventual target on this gold move is actually, I think this is a potential swing low all the way back to all-time highs. Yesterday being what I refer to as an average to range expansion on the daily chart, we had a 150% the average daily move to the upside yesterday, and P-shaped formation, I believe, on the volume profile just really leads to good continuation structure. And so I'm coming in here today pretty heavy long gold.
Yeah, look at that. Don't need to. I think you can put in your resignation letter at McDonald's after that long in gold.
Yeah. I mean, I like the free meals though, so
I know that is a great sweater. I'm kind of jealous of that one. I'm like weird like that. I love random apparel and things like that. That just makes me laugh, and stuff that it's like harder to. That you don't see everywhere, like harder to actually acquire.
Yeah, most definitely. Yeah, XY was asking about this. I have a friend that literally works McDonald's corporate headquarters, and this is like their corporate swag. So I figured their earnings were yesterday, and I'm trading gold. I was like, this is an appropriate day to wear this.
Someone asked me a question. Nick, do you mind showing how to set up key levels like the 24-hour VWAP? Sure. So most platforms, if you're using Ninja, there's multiple ways to do it. These are auto plotted for me on my charts. So it's an indicator from the Orderflow Labs team. They actually have a freemium edition as well that you can plug in the weekly MGI. So it'll get auto plotted for you as well. But it's simple enough on any platform. Even if you were to use an indicator like an anchored VWAP, all you would need to do is anchor that to the opening print if you didn't want anything like truly design anything or didn't have access to an indicator that's just going to automatically print this or didn't want to vibe code one in today's day and age. You can set an anchor point from the opening, the week open with the weekly VWAP, and that will, in theory, get you something like this, or to the month open, whatever you actually are trying to do. But these are all auto plotted for me. So makes life easy. Take as much of the manual effort out of aspects of your trading, and it does make you more efficient with your time and a little happier because you're not wasting time drawing horizontal lines everywhere.
Keep those headlines coming, Tracy, on that gold.
Oh God, what are we doing?
Poland continues to buy gold, has 700-ton gold. But yeah, it's interesting to start to see those headlines. Obviously, I mean, the move going into Wednesday night was just a freaking rocket ship. Mm-hmm. And we'll see how far we go from here. But got a lot of room to catch up to the all-time high in gold here. And when that move starts, it kind of reminds me of like the indexes. Like it's so much harder for me to like press the indexes up here. Like I do have some limits pretty far below in the ES down at 73.82. But I mean, we all know how hard it is to, get long on highs. And in hindsight, looking back on what that low looked like, I mean, we were all over when we were talking of it. I don't think either of us thought we'd be as high as we are now, as quick as we were. But when you have that confidence in the trend turn, it's time to turn it on. I've been it's trading Asia session, and because in my opinion the best trends begin in Asia, and you see that a lot of times when we come up in the day, and doesn't matter what market it is. Could have been the NASDAQ yesterday. I mean, what we gap up like 300 points or something. I'm not even sure because my internet was down still, but
yeah, it's funny. Even now, like you're seeing, I think we've been talking about this on the show for like the last couple of weeks, that we have kind of gotten the FU type equity bid, regardless of what crude has been doing, when it was sitting at like 105s, 107 a few days ago, and equities are continuing to make a new all-time high and could give two shits about anything that's going on in the other markets. And now with the fact that we're pretty much just selling off with crude, like, does that add more wind at equities back to just continue to push this grind higher and higher? I don't know. Who knows? It hasn't been correlated at all. It hasn't mattered until it matters, and maybe it'll continue to trade inversely, and we'll actually sell off today with crude for all I know.
Yeah. I think it's probably just more like really going to be sectored. Like the airlines are obviously going to be bidding on oil down, but what's been moving the market hasn't been the airlines. And I think the overall fear shock of the economy getting ripped by a $200 barrel of oil is completely over. And now it just goes back to, like you said, like low correlation trades. So I'm not sure it's really going to matter too much here, oil moving down.
Yeah, it'll be interesting to see the energy trade going forward with things like power generation and the data centers and things with all this compute. I think was it BlackRock CEO who was talking about he sees a potential future where there's trading based on compute futures and energy futures with that in mind, like power futures for tokens and things for compute. And I thought that was really interesting because I had a similar thought. And then everyone in the chat was like telling me like that's kind of what the base of crypto was. And I'm like, no, this is something slightly different of how I'm kind of imagining it, where, the actual, like a currency in some way, just like we would have like dollar futures against the euro or whatever, like you're going to have some aspect of compute type futures, and it has something to do with like power generation, the available actual power. So it was interesting to see a CEO of one of the major financial institutions out there, kind of similar mindset in that ballpark, because I hadn't really heard anyone talk about that yet. So I need to actually go back and read the full article because I just saw the headline snippet of it. But that was kind of interesting.
Yeah, I was reading an article the other day. I think the plant was in Idaho. I could be wrong on this, but it was a 65 square mile like data center. I was like, wait, what? Like, how do that just sounds like an insane project. I don't know if somebody read that and has a link to it, but I was like, man, this stuff is moving way faster. I mean, my eyes aren't on it. I don't really, there's a data center getting built in the south of Chicago, and I was driving to Indiana probably 5 months ago, and I saw the first data center getting constructed, and the size of that project was the biggest project I had ever seen. And this stuff is it's happening on the outskirts of major metropolis areas. But if you ever drive by one of those things, you're like, okay, like, wow, this is why the stock market, drugged by all of those companies involved, that is absolutely flying.
Move out of any states that allow data centers? Well, I have bad news for you, because I think that's just about in every major state's long-term plans, including, unfortunately, my state, which is probably going to get a good bulk of them.
Yeah.
I don't think anywhere in the country is safe, to be honest. Maybe California in some capacities.
Yeah, or I mean, I don't know what is the motivation. I wouldn't personally want to live next to a data center, like I wouldn't want to live next to a cell tower, but I don't necessarily think it's state by state, probably just more of a distance you'd want to be from him. But I mean, obviously, I have no idea about what that effect on the human body would be, but if that's the problem.
Florida won't get data centers due to weather. Yeah, I'm sure there's a few here and there that may scrape by for random environmental reasons. And also just the lack of infrastructure to get probably like the resources there. It just would be an undertaking from some of these more rural spots that they could put them in certain states to actually get the energy and the data where it needs to go. It's just an undertaking for some of these places, probably. I don't know. It's going to be a weird few years, guys.
Just gotta hope there's some form of normalcy left, right? I just want, can we fast forward to where the robot does my laundry?
Yeah, Jack's ready for that part of it, not the more cynical Skynet part of it, which is probably also shortly thereafter.
Yeah. As long as the robot's doing my laundry, I guess you guys can have a Skynet profile of my brain.
Once it gets to like combining like predicted quantum type outcomes based on prediction, like the prediction market on steroids type of thing, where it predicts the future before things actually happen and then it tries to prevent them and we go full apocalypse. Like that's probably in there somewhere, but until then, yes, I'm just happy it helps me build a website when I need it.
Yeah, there's only so much Claude can do for me before I like need a helping hand, like build a website, code some stuff, and it's like, all right, show up in my house.
Yes, go pick up my dry cleaning, Claude. Make no mistakes.
Make no mistakes. Which qualifier are you in, Nick?
I think qualifier 1. I think I'm doing the first one. Nice. I think Stowe and I are.
It's just you two?
Well, no, a bunch of people, but that was the name. That was the only name I quickly saw when I read the email. So, what about you?
2. I'm 1. I think I'm in Mexico for 1, and then 2. It's a day I get home from Mexico. So,
got it.
We'll see. See if my screws are on.
Nick, any link for the Super DOM? Yeah, the free DOM is you can go to several places. I think it's NT Tools. The production's going to put it in the chat for you, Martin. There you go. Production's already on it. I was going to say, I don't remember the link. I know it's on Prop Firm, whatever, that Prop Firm Compare, and then I think it's somewhere else too. There you go. Right in the chat. And Stowe did a really cool video, kind of, a elementary walkthrough of how to get started with it. So check out his Twitter if you want to see that. Yeah. So yeah, we're doing the same day. So that'll be fun.
See if we can start rolling over here in oil.
Has anyone turned on the spoos? Are we even moving?
What time is it? I feel like it's at the open now.
Whoa. That was weird. My chart broke.
Carlin, how do I control myself with a big position? I've been trading for so long that, sometimes you just got to have a plan and you just got to trust the plan, control the risk. Money doesn't really affect me mentally. It's just been doing it for too long. I've had 6-figure days to the upside and 6-figure days to the downside. And a 6-figure day to the downside definitely feels a lot worse than a 6-figure day to the upside. But I don't like somebody to ask me if I'm going to celebrate. That's just not how I think about trading. It's just, I saw an opportunity. From literally last week, I was looking for this trade. I started off in a small position, scaled into it, was able to, kind of keep my risk minimal, picked a spot last night that I wanted to get long, had a plan of where I thought it was going to go. You can play back to yesterday when I was on. I've been talking about this trade every single day when I'm on NinjaTrader Live. Talked about it yesterday. Talked about getting long the Asia session with the 47.66 target. So it's just everything's already kind of planned out, and so when it happens, I'm not as skittish. Just predetermining what you want to do. It's definitely a bigger position than what I normally take, but I do believe in sizing up in certain times when you have high confidence, and as long as you know what your risk is and you're okay with it. I think the problem that people have when they size up is if they miss that trade they sized up on, they might size up on the next one, versus how I mentally plan it is like, I'm going to size up on this trade and I have a high confidence in this trade. And if I do lose that trade, then I just have to take that loss and not, run into the next trade. I mean, this is a 4R trade. I risked $5,000 when I took the trade. And I mean, ideally my target would be 30 grand. So it would be a 6 or 7R trade potentially, but the relative risk to reward is a bit the same. It's just more of the confidence that I have in the trend.
Big R guy, huh?
Love the R's. I'm going to tell you a story about Chris. Chris took the R from me. I've known Chris for 12 years. No, he didn't take it from me. He took it. Gosh, who's the guy who's like famous for, he's a famous trading psychologist. He wrote an entire book, and he's the one who kind of really hammers down the R. What's his name? Does anybody know? Famous trading psychologist. No, it's not Mark Nicholas.
I don't know.
He's older. He's older. They're all older. I have to think of the guy.
Someone will probably
Van
throw it in
Tharp.
there.
There it is. Van Tharp. Yes.
I've heard that name. I guess I've never read any of their stuff.
Yeah. I don't even know. I mean, his workshops are like 80 grand.
Okay.
I don't even think he trades though.
I was gonna say hey, good for him. That's a special kind of clientele, I guess.
You know what? I mean, if you can really hone in.
That's what I would imagine just having Tony Robbins live with you for like a week would cost.
Yeah. I mean, that's probably on the low end. That's probably a lunch with Tony Robbins.
Right. Yeah, that guy sells out freaking NFL stadiums. So I guess you're probably right.
Speak in real life?
He was at I was at Dreamforce, and he did not a keynote for the Salesforce's big conference when I was in that world. He was one of the speakers for a session that I was sitting in on, and it was actually really cool. I'd never seen him never heard him speak live. So his energy I get it. Like I get the way he kind of conveys, because the energy is kind of contagious that he brings. So that voice can be very much a big part of what you get out of those things.
Marshaw, there is not a YouTube channel that shares my playbook. I do have YouTube videos that I've made, but it's not honestly really my entire playbook. But I do have a YouTube channel. I mean, I got videos going back, I don't know, 7+ years on that channel.
Let's see. If I'm looking for, I guess, spots to get long in, I mean, you would love to see us kind of pull back on NQ to around the 600s, the 615s. Ideally, I'd love a chance to get long again with like 420 guy, but I don't think they're going to give us that opportunity today. I don't think we're going to liquidate 300 points for no reason, but hey, wilder things have happened. But that'd be my my first like true knife catch type of spot. Like maybe we go down there and kind of retest the value area low from yesterday, but who knows? But if not, yeah, the pullback from the overnight down to the 600s would be a decent spot, about 150 points lower. We'll see what we get off the open here in 7 minutes.
Yeah, I have videos on exchanges that don't even exist anymore. Hey, fellas, wrecked in crypto. Welcome. Where to start trading for reals? Welcome to the club.
Yeah.
Crypto. Crypto traders are so funny. Anybody that gets started in crypto very rarely does well in crypto continuously, just because they're used to only trading a one-sided hyperbull market. And as soon as that thing turns, we've all been there. You keep going along and it doesn't work anymore. But I would say great place to start, NinjaTrader Arena Cup. You're probably going to want to dive into just how to use the software and then come compete for real cash prizes. And really the first thing to do is like understand how to just place a trade, the value of contracts. What is it that you're actually trading? I don't think you need to understand, how many barrels are in a oil contract, but you should understand what the price movement is on a $1 move. But that would be your first step. And then make sure you just sign up with the NinjaTrader team here in this link they're going to be dropping in. But, definitely start on a demo. I do not believe in starting on a live account. I don't know why people say that, especially if you have a lot of money. That's not a good idea. I mean, if you want to throw $1,000 and trade some micros just to feel something, sure. But if you throw 25K in an account and start trading full-size futures contracts, you can just write that check to the universe.
Yep. Trust me. And I think Jack and I speak for experience because I feel like that's probably what we both did. I think there is that path. It's sim. It's some kind of skin in the game, whether it be a prop account or like Jack said, $1,000 into a small futures account and trade one lot MES just to kind of get a feel and feel like you have some skin in the game and actually take some hits, take some losses and try some real strategy. So the money feels more real is usually a good phase 2. And then when you're ready, actually invest and to continue to trade micros, but try some new instruments, new products, start learning. But you have to have eventually a little skin in the game. Otherwise, I've learned, because I started in just trading paper money in a sim. Eventually, you kind of don't take it seriously because there's no true risk, but you at least have the foundation to understand how futures products move, what a DOM is, how to place orders, how to look at structure, how to watch candle patterns, whatever it is that's going to kind of resonate to you as a basic level 1 strategy. But eventually, take the training wheels off and put something at risk that lets you take it more seriously.
Yeah, and you have to, like, with the props and that, what you're doing is you're lowering your cost to participate, because if your cost to participate in the markets is too high, you're going to find yourself discouraged before you find yourself successful. And funding an account with $10,000 before really developing like a strategy that works over time is going to for sure lose the losses. And that cost to participate at maybe that's that high is discouraging for some people. So they're never going to see the light at the end of the tunnel. And so you just got to know that it's going to be a long road at the end of the day to learn how to trade. And, you take notes, write things down, seek people that you admire, try to stay away from too much people that just hype and drive Lambos and flash that stuff. Anybody that's willing to show up and trade in front of you like we do every day here in NinjaTrader Live is probably your best bet.
Yep. Pharm, throw 10 grand into an account and vibe trade it. Yeah, that's exactly what I think a lot of us do. You're like me in your first month where you turn 10 to 30K and then 30K goes to 0 all within the course of like 2 weeks. So tuition to the market right there. Don't, learn from my mistakes. And I'm sure Jack's got some great stories from when he first started too. But that's the simplest example I can give you is you feel like you're a god and you know what you're doing and this is the easiest money you're ever going to make in your life. And then eventually you get a different market condition a week or two later and suddenly you're humbled very quickly.
Yeah. I was talking to this girl a couple days ago and she's like, wait, so like, what do you trade on? Like vibes? And I just like I just burst out laughing. She's like, why are you laughing? I was like, cause you just said I trade on vibes. Like,
I just still love that term because I know we use it, but there's no other way to describe, like when you watch XY, like read the DOM, like there's no other way to describe it. I'm like, he's feeling the vibes of the buying and selling. That's really what it is. But you can't actually trade off that. It's just a term that we use to describe kind of having that mental intuition, the muscle memory, the pattern recognition. That's the vibes. But, you're not physically just like pressing a button and hoping for the best. Yeah.
Like vibes basically come when you've been doing it so long, you start to develop a gut. But realistically, if you haven't been doing this a long time, you don't have a good gut. I would imagine, and you also have to discern when your gut is actually speaking the truth and when you're forcing it to tell you something. And that's a really hard skill to develop. So realistically, you should start off as most mechanical as possible. I would even do something as simple like there's a couple different things. All right, let's just say you're focused simply on finding support levels. Find support levels with a bracket order with an equidistant stop and target and just see how accurate are you. Let's say the market's completely random, which for the most part it is. Technically, if you were to flip a coin, you should go either if we were to go 50 ticks up or 50 ticks down and you flip the coin, you should be right half of the time. So if you were just as a skill set, let me just pick support levels. We're in an uptrending market. That's pretty obvious. Go out there with an equidistant stop, equidistant target, and see how often you're getting your target hit before your stop. That'll tell you kind of like, at least in this market condition, your ability to predict potential support levels. So there's many different sorry if I missed a question. If you ask me to answer your question, repeat the question because we're answering and talking the whole time, so I'll miss it if it's back. So Fernando, if you want to drop that again.
We got. Oh, it's open. Good luck. Trade safe. Hope for a little bit of volatility today. I don't want to see if.
What's this gap up right now?
Not much. 20 points ish.
18 points in the NQ and 8 in the ES, or that's what we're up right now.
Yeah, I mean, didn't do much.
I want to see a pullback in yesterday's range today. My levels are pretty far below us, and the thing is, I don't want to short. I'm just not gonna do it unless I get 4 of these indexes to flip bearish on my trend bias, which they're not. So it's just a waiting game for the indexes for me.
But anyway, good morning, guys. Everybody in the chat. Everyone's had a wonderful start to their day.
Okay, so between the ES and NQ, which would you prefer? I would say I started off trading more of the ES. I trade more NQ, but what I do is I look at them side by side. I have, you guys see one screen, just so you know, I have 4 screens. So, it's not that I'm like hiding stuff, but it's only so much we can show. But on one of my monitors, I always have, that is one of the main screens I've looked at. And I've looked at ES and NQ side by side for a decade. Yep. And I can tell, markets are moving at different times. So I don't really necessarily have a preference on like, I'm more attached to this or that. The NASDAQ just sets up more because NASDAQ performance relative to ES performance is, it's just filled with stocks that are basically changing the world. So it's moving a lot faster, a lot further. So there's typically more setups in the NQ. So, but there is times where the ES is just trading cleaner. Meaning it's reacting to what I'm anticipating more, and then I'll move to the ES, or I'll move to the Russell or the NQ. But I trade enough products that I just look for what's doing exactly what I want to do. I can trade any market at any time, but there's certain markets, in my opinion, if a market is trending and giving pullbacks, that's going to be the best for my strategy because it's pulling back, giving me an opportunity to get into the continuation. And that's exactly what gold's doing. It's pulling back right now and it's continuing to new highs. That's my favorite type of market. And if I can pay attention enough to notice a market that's pulled back, set up for a continuation of new highs, I can put myself in positions to get what's called a 6R trade, or basically 600% return on my risk.
Yeah, yesterday was a a good day where if you were kind of watching ES and NQ, there was a weird divergence. NQ was chopping around its, value area for the most part, but ES kept making like new highs and was sitting on his highs. And I think everyone was asking like why we were looking for longs. And we were kind of trying to explain that like NQ had not broken any structure. It was still sitting within the range. It was holding where you like that last line of defense while ES was making new highs. And you can't assume that one's leading the other, but ES looked a lot stronger. So it was kind of helping lead us to stay long, or for me, who's short the top of the range, to get out of my short on like the second failed attempt at breaking the range. So I think what Jack's saying about watching both is definitely important. We are getting buyers trying to push us up here again.
But it just depends on your strategy. I mean, you really got to define like what, are you a better long trader or a short trader? Are you, is your average hold time 5 minutes, or is your average hold time 55 minutes? These are things you should pay attention to and develop your personality here. I'm going to take let's see here. Pushing through this high in gold. I definitely want to see a continuation. This 66, if we can punch this, I'm looking for 78s. I do think we can get all the way up to 48.20s by tomorrow. But I don't know if I need another night where I'm checking my phone the entire night.
Yeah, it doesn't matter when I have stops in profit, trailing, auto trailing, whatever, I'm still going to be looking at that damn thing. I'm so bad.
You want me to do this?
Yes, Chris. Jack is all of the R's in gold. He currently is the R.
I think I'm going to be smart and take a few off here, just because this was my, man. Actually, either that or I'm going to move a stop below that last 5 minute bar is what I'm going to do.
I love gold.
Oops. All right. Took 2 of my 5 off there in GC. The 66 was my target yesterday. So as much as I'm not going to be that much more greedy. That was my target from yesterday. So I think we can go higher, but I need to take the process and not try to outsmart myself now that I'm up a bunch.
Let's see if we press into this. Nope. Okay. We're still going to chop.
Yeah, the other thing is I've been in a CL trade now for 25 minutes, without getting what I want to get. So I'm getting a little concerned about holding this. Even though the entry's been good, I need to move my stop down in CL.
Gonna wait. Yeah, sitting on the lows. NQ is just kind of chopping around in the middle of the range. I was trying to press into a short there as NQ was sitting at the basically just below the RTH open while ES was making new lows. So I thought we might press a little bit into that and I could get a kind of a flush down towards 700s, but stopped me out before we made the move.
So with the gold entry yesterday, I mean, one thing, obviously you guys know I watch multiple markets, but the gold market yesterday, it was an average to range expansion of 150% of the average. And it was basically a P-shaped volume profile, which if I have that combination, it's a continuation trade, and I have pretty high confidence in a continuation trade. And then I simply were just, my entry is 4704. So, I mean, if you want to know what got me long, go just look at the chart, 4704. draw a line on there. See if you can. What do you notice about 4704? But I mean,
What about
most of it. Go ahead.
someone asked me, what about Nick Delta? What do you mean? Like my Delta settings here? What is your question exactly? Nice little divergence here with the S and NQ. I mean, the range is super tight though to start the session. About 6 points in yes. What are we doing here?
67.
Oh, 9 points. Excuse me. I can't do math.
Do I have trouble sleeping at night with position? Honestly, I went to dinner last night and had 2 glasses of wine, and I feel like that probably actually caused more sleeping problems than this position did. But I will wake up and check it, which is going to interrupt my sleeping for sure. But then again, I'm a midday napper. The good thing about trading at night and working from home is you can kind of just go lay on the couch when you're done. So I do a lot of that. Do a lot of couch laying if I stay up late. But I'll tell you what, sometimes I'll stay up late for $30,000.
Yeah. Yeah. Usually a decent reason.
Yeah, I gotta have a reason. I've stayed up late for a lot dumber things, so just taking out highs here and indexes. All right. I am moving my stuff right here on the remainder. Move my stop up again to 51s here. So let me explain how I'm managing this CL position. I got in the trade. I have not hit a first target in 25 minutes. If that had instantly moved my way, my second target would be a little lower. But because I haven't hit my first target in 25 minutes, I moved my stop down above that high just because that's telling me that position. I mean, it's not bad, but it's not great. And I've moved both my targets up to just basically take that off. So basically lowered my risk on the trade from what it initially was, and then also have moved my targets down. The faster a move reacts, the more aggressive I am with my targets.
There we go. Where's my position tracker not going? Why is it on GC? I'll fix that. See if we can get a push down to like 43s and I'll get one off here. What are my 2 volume profiles? So you're going to see a swing leg. So the current rotational leg that we're basically on, which is probably from kind of this little spot here in the pre-market at like 700s. So basically it's just giving you like the current rotation, which is pretty much all of this volume here. And then the delta profile, same thing. It's just giving me the delta version of that rotation for NQ. And then the one on the right is the RTH session. And this will be released, a version of the leg to leg here will be released in the coming weeks for free. Because currently this is a custom indicator. Come on, let's break the RTH open. Let me cover one of these.
I've traded the Nikkei futures before, although not recently. It is ripping. It is ripping. It's actually the best performer behind the NASDAQ over the last 10 days. And then it's metals, copper, silver, gold. We'll really see silver. Oh, Bitcoin, I guess, is up 11% after. Well, Bitcoin looks like it's going to pull back here. May have found a temporary high.
I'm basically watching ES for the rest of this trade now.
I got limits in ES at 73.82 half, and I will just be fighting on it.
Come on. Yes, my position tracker is for some reason stuck on GC. So once I'm out of this trade, I will figure out what's going on there. I'm just not going to open up settings as I'm trying to kind of scalp this tight opening range that I'm getting less and less confident in by the second. So if I get one off here, I'll probably go break even. There we go. So got that one off. Let's see if I can hold this runner for a little bit and maybe test down to 700s, which was my initial thesis when we were kind of sitting on the lows in ES. ES is barely moving though. I do like Jack's spot at 83, 82s kind of area.
I just pulled oil off. I just don't like that we're not going anywhere. I'm going to place an order to short just a bit higher than we currently are. Still think it's going lower, but.
Mark, the free DOM is released. It's all over. You can go to Leo's Twitter if they don't have the link quickly here, paste it in the chat. But it's on there. I think it's ntprop.tools is the site Leo set up for it. I don't know. But yeah, it's free. It's out. More and more content to set it up. Stowe just released a video yesterday walking you through settings and how to set it up. So the boys have been putting stuff out there. But this little scalp turned into a nice trade. There we go.
I'm going to get close to the remainder of my trail stop. Glad I took off that CL, but see how the CL wasn't moving my way and I just flipped it out?
I'm going to cover this. It's a full, the entire day's rotation to previous day close. It's probably going to get a reflexive bounce here back to the OR mid, and I don't want to get trailed out of this. So I'll take that full 60-plus point trade there.
Nice trade. Nice trade.
Thank you, sir.
Quick one. Gotta love the quick ones.
Yeah. The first one, I mean, that was the move I thought we were going to do when I kind of took the quick, like 8-point stop there. It just, we stopped pressing as ES was sitting on the lows and NQ was kind of on the highs. So kind of the opposite version of yesterday's trade, if that makes any sense. But seeing this volume profile so far, I mean, that's the kind of scalping is the way to trade this so far, because it looks like we just may be chopping for a little bit here.
It's kind of amazing. The higher we go, the faster, the more the higher the notional value is of the NASDAQ, and then like 70 points is just like blink of an eye,
Yep.
And it's just going to keep happening faster and faster as the index gets bigger and bigger. All right, here's CL popping up to my next level. Let's see if I can get in this short here. There we go. Oops, wrong order. All right, trailed out on my final bit there of my gold trade. So I will be cocking and loading that thing back up lower, but 50 plus points right off that 80-66 target. I'm glad I did at least take partials.
Nick, can it be set as RTH session in the current volume indicator? Yeah, if you have the order flow edition of NinjaTrader and you're using like the order flow volume profile, you can set it to regular trading hours, I believe. Or you set the the actual time. It may be like the duration time, but I feel like it has the regular one has the session because this one's custom because it's part of my whole thing here. But these I built myself, or I created this one myself based on the order flow volume profile indicator. That's normal for NinjaTrader. This is not the custom built one. So you should be able, this is just set week by week. So you should be able to set it session by session or whatever settings you kind of want. There's plenty of ways to manipulate it in there.
Would I add anywhere in here, Pat? What market? My levels below would be prior day high, and then if we get a deeper pullback, 47.05 area. But prior day high is 47.35. I'm not going to mess around in this range anymore because we came off that 66. And then, the most aggressive thing would actually be for us to hold right here. And if we held right here and made new highs, my next entry model would be a little bit higher. But right now, my first place of re-interest would be prior day high in gold. I'm not in. We've spent a lot of time up here, and that was just kind of a failure after just peaking through that high. So I'd like to see a washout.
Someone asked me, did the divergence in NQ and ES at the high you shorted play into your thought process? Yes, I think I was trying to articulate that. It was kind of the same setup that we were seeing yesterday when I covered my short, and I think XY was kind of buying the 420s. I think Stowe got long there, but it was the same basic thesis that like ES is looking like it's trying to party, and NQ is still holding like the bottom of the opening range, and there's not a lot of interest from sellers to take us lower. Like you're seeing them step their foot off the gas at pretty much what was yesterday's value area low. So similar setup where ES is sitting on the low today, NQ is not really trying to party, is just sitting inside of the top of the opening range, and you're kind of seeing no buyers really continue to initiate and lift the offer up there. So yeah, jump in short. This took two attempts, the same kind of setup, but ES that whole time was sitting at the bottom of its range and NQ is at the highs. So I'm not saying one was leading the other. I'm just kind of pressing into what looked like the better side, who was in more control at the time. Yeah, this is just turning into a choppy D-shaped profile so far at the all-time high, which is just a lot of fun.
Choppy, two boppy.
Yes, it is, Pax.
There's always news, Sammy.
What we got?
He just said there's news on CL. I'm like, tell me something. If you're trading CL, there's news on CL. Doesn't really affect my process.
This is a headline-driven volatile market. Like that's the only thing that seems to move this market for the last 2 months plus is just headlines. So I feel like there's no way outside of just having respectful stops to trade. Like I just can't worry about headlines anymore.
Yeah.
Data releases don't even seem to move us. It's the rogue tweet or comment from some geopolitical ambassador somewhere matters more than the the GDP report or whatever's coming out. CPI just seems like nothing matters anymore except what's on the airwaves.
Charles, I don't trade on a DOM.
No, you cannot use the free DOM on Tradeovate, but Tradeovate does have a DOM that you can have level 2. I don't think you can do the pole stack kind of stuff on there, but depends. But yeah, it's not available on Tradeovate. And no, do I align my chart price with price levels from your DOM, like ticks per level? No. I'm less concerned with like levels and things lining up on the DOM. I'm more concerned about the delta at certain price points. That was that was a good cover, right? The previous day close. Sometimes you just gotta respect the way the market's moving, and in this case, the like being short for a longer than a very short scalpy type of time horizon is a fool's errand, because we're at all-time highs, and I'm not the best trader at just blindly pressing buy with wider stops and just kind of letting the market naturally do its thing. But still, I had almost 100 points, not even, probably like 80 something points between the two contracts, like one trade off the open. We're not even 30 minutes in. Like, that's a pretty decent quick session with not a lot of size being put on for me. Just a simple kind of feel it out first trade or two of the day. And that can turn into a great, now I can go on with my day, go touch grass, go to work for some of you that do this before you go to your real job or in between your real job. Definitely, yes. Definitely a vibes type of trade. That was 100% why I kind of got short there and why I covered. Like, why I was not holding for Armageddon a little bit lower, like down here to, the overnight structure. It just, settlement is always a decent place to take some size off, especially in this type of up and to the right regime that we're in. It's hard because this is what we've been doing every single day for the last month and a half, which is retest a little bit of structure, and then we shift the value and the volume up another spot, and we'll retest it again, and then we're up. Like, that's the same thing we're in. So holding out for today's the day that we're going to retrace the last 3 weeks, here's a fool's errand. Yeah, this is somewhat better than if everyone remembers the what I coined as the range from hell. Going back, whatever, when we were doing this, I don't think we can see the full thing, but pretty much all of like January and February, when we were just trading within, I think 25,420 to 24,420, and I think that was going on for what, Jack, like 6 weeks. We were trading within like 1,000 point range in NQ, and we just would not leave it. And you and I just kept saying, no, like the 360s to 400s, like you want to buy that. And you want to kind of lighten up about 800 points higher than it. And we just kept rotating between those levels week after week after week. So yes, I will take us in price discovery over doing absolutely nothing. Granted, I am just not the best trader with everything else going on in the world, with crude over 100, of just continuing to blindly buy the highs and it just drift up. But we're in that kind of regime where it just seems like all of the other flows and CTAs and everybody having to play catch up because we keep drifting higher. They're forced to buy and to continue to buy to hedge their other positions. Like, it just has that natural drift to it. You can't fight this. That's why, I mean, it took me a couple summers to finally learn this lesson, a couple summers of pain. that basically said, if you can't trade this, sit out, but do not try to short it blindly.
Oil here. So that entry, just to kind of explain that, because that was got short, wasn't moving my direction fast enough, covered the trade in profit, relimited a higher level. We squeeze, we have an ATR expansion, I get short, and then an instant fill back into the range. Now, this is a trade I'll hold. And if you've been paying attention, I start moving my targets here. I have a timer I set 10 minutes ago when I got short for 25 minutes. I'm going to let that market go for 25 minutes because of that instant reaction, that failure to continue. The trend has been down. You have a range expansion to the upside. It immediately fails. That tells me most likely that my entry was probably the result of other people's stops. And it would have been mine had I not cut my position and actually relimited. So that's just, perfect trade management from my rule standpoint. And now I'll let it fall because I have targets at new lows, but I like to give it time instead of picking a price. When I placed a trade, I had an auto bracket that picked price levels of which I was going to cover to, but I've moved those down and decided to let my time targets play out as opposed to just considering price as the only factor.
Yeah, we got some quick absorption at that high at 800s too. So, and ES is still sitting at the bottom of the range. So my short, I mean, there may be another short here in NQ because ES seems to be, if it breaks the settlement price here at 87s, like we could definitely rotate kind of down towards where Jack was looking to get fill, if not the overnight low. But for the moment, we're holding the bottom of the range. But that divergence is still there.
Yeah, we have actually flipped bearish on 3 of the 4 indexes on my trend scan.
Look at Rusty getting walloped.
Yep. The only thing that I have bullish on the trend bias right now is the NQ, which makes me wondering if I should drop this ES. My ES lower levels of support here today are going to be all the way at 73.55 half and 73.68. I'm a little. I just still don't want to short, even if I think we're going lower, though. I just don't.
Yeah, I kind of want to take this, but at the same time, like I got away with it once. I don't know if I want to press my luck here that ES is finally going to make the move. I mean, this is like you could feel this out with a short, stop new high or not. Yeah, stop at a new high and know if you get taken out, we're probably going to take out the overnight high at NQ. So you could run this with a relatively tight stop, but you may get wicked out and then it still could kind of roll over. So, but it's not the worst kind of safe, tight stop type of scalpy short that you could take right here. Jack, Is your market analyzer available or is it proprietary?
It's currently proprietary, although I have a call with Mike later today, who's the lead coder over at Ninja. It's going to help me get a couple of the things on the platform, including this risk, this yellow box I have at my top, which tells you what the 150% range risk is per 5-minute bar. Just keep. So I think that's something important for everybody to know. That's that's not going to do anything but add to you, and it won't affect my trading. But I will probably eventually release this market analyzer, but to be honest, I probably won't do it for free. As my dad says, it takes money to buy whiskey.
Speaking of releasing things for free, I've gotten DMs from a couple companies that do, I don't even know if they do this, but my like social clip thing that I've built. I've had a couple small companies reach out to me and want me to use their software. And I kind of wanted to get back to one of them and kind of say like, I think I built something that's better than whatever the hell that product is because I just looked at it.
They're looking at you to use their clipping software.
Yeah, like whatever I'm doing, they're like, hey, I think they think I'm clearly with some brand or something versus me just have vibe coded my own automated workflow for the way I clip social clips now. And I don't know, I've had a few reach out to me, and I'm also just kind of like, I think your software kind of sucks, which is why I built my own. I'm sure if I put this on GitHub and open sourced it, it could be like 1,000,000 times better, but it works for me.
Yeah. Well, you got to get traction on it first, which you got to blog about and yada, yada.
And you think who has the time, man?
Dude, right?
I got to press buttons.
You gotta show up. Any advice for days like today with a major divergence between NQ and ES? Okay, so I think it's as simple as your long setup should be focused in the NQ and your short setup should be focused in the ES. If you are itching to go short, why short the strong one right here? Well, instead, wait for a support level in that market. It's just gonna play what the market's telling you to do. Technical analysis is looking at recorded history of price action to determine potential future outcomes, and recorded history of the price action is telling you that the Nasdaq's strong on the ES. So why would you short the NQ and go long the ES instead of vice versa? You just make it easy on yourself. Of course, you can always be right in almost any trade, but short the weak, long the strong. I'm always paying attention to the percentage change difference on 5, 1, and 20-day periods and just keeping a mental note in my mind. Not that I write it down, but I'm aware of what the strongest markets are, what the weakest markets are. And just like CL, I'm shorting an expansion to the upside because it's probably going to fail because, take a look at the CL chart. It's been weak. Yeah, this is a very crazy bear market rally.
Well, we took up the overnight high-low stat. Thank God, just got hit at the very least in NQ.
Yeah, we came about a point away from my ES entry. Unfortunately, did not get a fill on my limit, but that's okay.
Which vibe coding do you use for NinjaScript? I have not built any trading related indicators yet. I have no need, I guess. I don't think I'm trying to recreate the wheel on things. Like my trading strategy, guys, is as simple as kind of watching delta at certain spots of market generated information. So the horizontal lines that you see on my chart, like I'm just kind of watching what order flow looks like when price is at those spots. And then kind of just having rotations between volume profile structure to volume profile. Beyond that, there's not really an indicator that obviously would truly help me. That's why I really am just a delta and volume trader. So, I use Claude and Codex and local models. Like I use everything. So, and I have a whole architecture between a couple different computers that I kind of utilize. But as far as like trading stuff, I really have not turned my brain to like trying to. Jack and I, we talked about this on Tuesday afternoon, but it's like I tried to do back testing stuff, but it's just not there. The way these models are, like you can help me make indicators and things and automate maybe some alerts and stuff, but I don't think it's really something I would want to turn the reins over to and build some sort of strategy that it has the keys to actively trade. I think it's just helped me kind of compile data sources and information.
Yep. Yeah, you're just filtering.
Mm-hmm.
I think that's the best thing these things can do is really just filter your attention to specific points. And, otherwise it's just really hard to see through all the noise when you're staring at it all day. That one of the hardest things about trading is it requires patience and attention to detail at the same time. And very few jobs combine those skills in a sense of like you have to sit there and do nothing while at the same time watching everything.
Yeah. But here's the other thing too, guys, like with the vibe coding stuff, like there's a lot of really crappy ideas that you may think are like good things and you're going to end up wasting a lot of time. So part of it is just making sure like you've at the very least, and this is where I think why it's been so easy for me to kind of pick it up and build some more robust workflows is because I think of this back to the way I used to structure projects and things at my old real job. So I kind of already have things thought out and formulated before I even start, which is half the battle. Otherwise, you're just going to be spinning your wheels and going in circles with these things. So before you start, I guess, playing around with these models and spending money and, you know, looking into the local stuff and trying to automate strategies for trading or whatever you're going to do, like make sure you've kind of whiteboarded out what you want, like what your data sources are, how this thing might function. Otherwise, it's just going to be an AI slop garbage and you're going to waste 2 weeks doing something. And it's really going to provide you no value. So tread carefully is what I'm saying.
Mm-hmm. Yeah, it is McDonald's. I'm rocking in with the gold arches because it's coming in gold long. This is original corporate merch.
Yeah, I'm so jealous of that sweater.
I'll see what I can do about getting some more. Might have to just show when you guys come to Chicago, maybe just get McDonald's merch.
I forgot because I used to call. I'm not gonna continue to dox myself, but they used to be one of my enterprise customers that I only had one meeting with their account team in the Mag 7 world, but it was a part of their IT team, so I guess it's not the greatest team in the world, but I never got to go there. It was just a Zoom call. I never got to see the how the sausage was made of their systems. This was back when they were, I think, trying to really push the customer facing app and the changes and kind of the automated and the reward system I think we were talking about.
Yeah. Get that scan coded.
Well, it was like the data repository of their customers and, kind of utilizing their first party data to recommend and make things more dynamic in the apps and for rewards and stuff. It was like this interesting kind of conversation, but it makes perfect sense for their business. Big McDonald's guy. Haven't eaten there in years.
I wish I could say the same.
My wife, on the other hand, though,
loves it.
She still gets it.
Can't be that bad for you. I mean, Warren Buffett basically lives on it.
This is true. Do I want the short again? I don't think so. At this point, I mean, we just made another new all-time high, and I'm not going to be the first moron to decide, yep, this is the spot it stops. So this is kind of the point where unless ES rejects right here, kind of off the opening range low, the 30-second OR low, or whatever this is, 96, 97s, whatever this price is, previous day high. Unless ES decides to reject here, there's no reason to short NQ.
All right, we are approaching my 1 minute left on that 25-minute timer, and that is the difference of holding for time as opposed to holding for price. This has been as good of a reaction as I could ask for since I got short CL, just straight down the first 25 minutes. So I'm just going to cover one here and Just gonna put my order up here. I wasn't sure how far it would go, and I'm not gonna pretend to guess. Instead, I just let the market actually be the market and trade. And then I'll just move my final targets down to the prior day low, and maybe even through that. The prior day low there is 88.66. So, and then I got 87.25. That'd be me basically holding for quite some time if we get all the way down to 87.25. But 88.66 prior day low. I'm going to move the target there. I'm going to take one off here, and I'm also going to move my stop below my entry, and that is the management of the position.
Nick gave a speech earlier about not shorting this, guys. Yes, I did. So,
do as I say, not as I do.
I mean, I short it, but I short it before my speech, which I think at this point, in some cases, the short thesis is somewhat invalidated. Because when I made that, ES was sitting on the lows, NQ was sitting on the highs of the range, and it kind of made sense. But yeah, I've said this ad nauseum. Just don't be the first idiot to short the all-time high.
All right, gold's actually peaking back up here, so I may have to get still holding that bullish structure in GC. I think we're probably moving up to 78 here today based on that hold. So I am going to attempt another long here there.
How many you still? Oh, did you close out?
I
of
flattened
here?
it out. I took 2 off at highs, and then I trailed 3, and I got flat that trade.
Can we get a round of applause for Jack and his $30,000 plus GC long that he was in for a couple days?
Good trade for me for sure.
I mean, keep in mind he was managing that trade after being struck by lightning and homeless for I think 24 hours.
At least.
Almost got stuck in an elevator, I believe.
I've been through a lot. This is the last thing that's going to take me down. You know, my fear gauge is a little high after all that. Let's see here.
Yeah, I got to be honest. Like me with a no power / internet situation, I guess something that in profit with micros, I'd be like, all right, I'm out. I think I'm calling it a week. That's a sign. Oh my goodness.
Oh my goodness is right. I was going
to say a sign from God that maybe I should just stop this trade. Okay, we're getting a little bit of spice going on. So there's some news somewhere.
Yeah, I don't know what the news is, but my orders do not all fix up. Yeah, it was quite the experience. What the heck is going on here? All right. Well, I got filled in my gold, but for some reason my stop completely disappeared, and I think that's because before my stop order actually got placed, the price had traded through, which is kind of crazy. And then I had I don't know if anybody else had some order issues there, but I had an order freeze in a couple markets, but got long that dip. I'm going to aim for 78s now here on this re-entry here in gold, and I'm going to once again set my old timer. I want to make sure it's moving my direction. I'm going to have to put a stop in because my bracket didn't function correctly. I don't know what that was. U.S. sanctions Iraqi official over Iranian oil sales. Nice. Yeah, no stop loss in a dream. It's a great way to trade. Actually, don't want this up here. Thanks, Tracy. Total profit on that gold, I think I'm up over 30 on the day, but the profit on that trade was, I think, around 26 or 27. I don't really know.
So we U.S. to sanction Iraqi official over Iranian oil sales. Oh, wonderful. Nick, do you notice when using volume-based candles, computer slows down? Do you use a PC or laptop? Which one? Thanks. PC. I have not noticed any latency. I have multiple charts. I use like a couple different charting softwares between TradingView and the others, and Ninja, like I did with different things on each. Some are minutes, some are volume-based, and I don't really notice much of a difference between the latency here or there. Keep in mind, guys, there is a bit on YouTube for you, so it may look like it's experiencing it or a slight lag just because I'm sharing my screen through a piece of software that then's being grabbed by production to then be pushed through. So it may look a little choppy when things kind of quickly happen. But no, I don't notice much of a difference with how my candles print, whether they be minute candles or volume-based.
Instant bid though, that was a good entry in the ES. I think if anybody took that, just a pullback instant bid. That's why you got to have limit orders, because a lot of times those wicks, if you got them, I mean that's my G. I had a GC limit. Both my trades I've gotten in here today, both these entries have come on candles that have just shot up into support or resistance levels that I had previously anticipated that I probably wouldn't have been fast enough to react, at least when you're trading multiple markets. Yeah, they're not as big as they used to be, the news candles. But yeah, there's also algos that just read headlines and spew orders based on information that are immediately new high there coming up in NQ.
Yep. Everyone get your confetti and celebration hats on for another new all-time high here momentarily. Just about one more tick. No? Oh, I guess that was a new all-time high. That was a tick higher. So congratulations, everybody. We did it. Here we are again. I'd like to thank everybody. 401ks can rejoice.
I know my dad's gonna be in a good mood this weekend when I see him.
Yeah, my dad's been long semis since like 2020, so he's been very happy in all of his retirement stuff.
Oh, he's chilling after this month.
He was telling me my mom's is like he's been self-managing that for like whatever the last like 10 years, and he's like she's more heavily weighted into the semis and tech than I am, and like hers has been outperforming mine for the last couple of years, and I'm like, yeah, that tracks just literally based on that. So they're happy.
It's always fun around. I mean, shorting on the way down. Just look at how long it took us to make a low and how long it took us to make a high. The new fear is to the upside. The speed of which the market travels has inverted. If you haven't noticed.
Yeah, come on. We that 10% correction or 11%, whatever it was at NQ. It took like 3 months, and here we are a month later, and we are up 25+% in the Nasdaq. And it's just been straight up, like COVID V level.
Yeah, the saying used to go elevator down, stairs up, and now I think it's elevator up and the stairs down. At least that's what this entire move was. It was stairs down and elevator up. I mean, just take a look at the chart.
My goodness.
I mean, I just keep moving orders up in NQ, but at this point, I don't know if I'm getting them.
But remember when Nick was talking earlier and giving a speech about why we don't short the all-time high? Here you go. That's the kind of stuff as why. It makes no sense to do. Let it come back to structure. The only reason I was short off the opening range high is because we still had structure to the upside that I could kind of lean against, or at least know where I'm wrong and that we're going to go take out the overnight high. So just be careful if you're trying to short. as we are poking new highs. That's all. Don't be the first person to do it. All good. Long from 742. Hey, great trade. Maybe I should have, if I would have pressed reverse, I would feel very good right now. Instead, I'll take my cover at previous day close.
I haven't looked at the YM yet today. Anybody know what's dragging her down? That's not even down that much. I'll tell you what, though, when that thing bottoms, it's going to go right back up, just like we've been doing. So I don't know when it's going to bottom, but
yeah, it was an exhaustive looking kind of FU punch to a new all-time high up there. So we'll see if it has any legs. ES is still holding inside of its 30-second opening range. Or just below it now.
I think MNQ margin is intraday is $200.
No, I feel like it's less than that. I feel like NT is less. Like 100 or I think 100 for NQ per MNQ. Someone correct me if I'm wrong, but I feel like that's what it is.
I could be wrong. I know it goes back and forth. It's been 100 before. I don't know.
Yeah,
Okay.
I have no idea what it is now because I haven't, I guess, traded. I really don't trade micros that much. I haven't traded them since like this time last year when it was super, super volatile.
So 50 points. 50 points. Which is what we just moved in a minute. Don't go full margin, please, ladies and gentlemen. All right, pushing up. I want to see the gold close above these 66's previous resistance this morning. I do think we're on our way to 48.20s here on a higher time frame. And I'm not quite sure that's going to hit today, but my next target above would be 78s and 90s. So I was able to recapture some of that. I'm going to just stagger these targets here. But once again, setting that timer, we're only 10 minutes in from my gold entry at high of the day. I am comfortable. I'll move my stop below the low of that candle.
Simplexity. We are talking day margin. Full margin, it might be in the thousands per contract to hold through maintenance. But I have not looked at that in a while.
Neymar, I do not have a promo code for my Discord, man. If you want to join. I don't sell it. It's there. People want to join, they can join. I don't push it. I know its value. And if you want to join, go ahead. If you don't, you can catch me on NinjaTrader Live.
Six MNQ and your current margin is 26. Yeah, that's interesting. That seems very, very high.
You can follow my Twitter. It's probably the best place. It's in the link of the bio here of NinjaTrader's stream. So just follow my Twitter. I got more information about what I do outside of that on this. What do I think about the Russell? Haven't looked at it today, to be honest. I got a level at 28.63. If we trade that, I'll look for. It's just a retest of basically the lows of Wednesday. If we can bottom out of that, I'll pay attention to it.
Sam, it's just Nick.
your sad traders are on Twitter. Sounds like a personal problem.
What about sad? Oh,
He
I'm
said
kind
he's
of
sad
sad.
that most traders remain on Twitter. I don't know what that means, but
I mean, okay.
it's so sad. You need a real thing in your
I
life
think
to be
you'd-
sad about if that makes you sad.
You probably need, to evaluate what the people you follow then, I guess, because I feel like some of us that are on there tend to provide some aspect of value versus just taking pictures of watches and cars, I guess.
Welcome to the world we live in.
Nick for a Lambo. Yeah, I'm just going to change my name. I'm going to move to Miami, change my name to Lambo Nick or something.
And there is my Twitter in the chat for anybody who wants to follow it. NinjaTrader dropped it. Production. But yeah, I mean, as far as my scan goes here, both the Dow and the Russell are bearish on every one of my things I look at, which is 3 separate things. And bear, 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 bear. So, but I'm still bullish bias. So what I will do instead of actually trying to short these, because I'm really just still not interested in shorting this market, is actually wait for a reversal signal. So I'll wait for one of these to go bull, and that'll tell me there's a potential bottom, and then actually look for a long as opposed to trying to chase this short down. I got Lambo Roll on dial.
Oops. Closed the wrong tab. I accidentally closed the YouTube chat. So I can't see what you fine people are saying. What are we doing here?
I trade a lot of things in Asia. And in fact, what Jim asked me, my favorite trading session is actually Asia, because trends, when we're trending, the trends begin in Asia. And then we start the day with a 400-point gap up in the NQ, and everyone's like, what happened? It's like, well, the bid was in Asia.
Yep.
And then, a lot of times you can get long and just hold it.
And there's a good logic there too. It's so it seems like it's so rare that we are in like periods of higher volatility when it doesn't make sense that happens. But when we're kind of sleepwalking, whatever you want to call these periods, these lulls in the market over summer, like there is statistical backing of that. What Jack is basically saying, which is like, it doesn't make sense to ever get short Globex at all. Like you should really just be looking for times and dips to buy and limit orders to potentially set a structure to try to get in, because over time, it just seems like Asia and London tend to bid us up.
Yeah, there's an insane chart. I haven't seen it in a while, but it's an overlay of intraday performance versus overnight performance. And like
intraday is
I think it's definitely over 50% of the gains, and it might even be as high as 70% of the gains have been in the overnight market.
Yeah, it's pretty much like your 401ks need to thank the Asia and London traders, because that's the reason we're up, apparently. It's crazy. Crazy. Nick first said you give the market permission to trend down. I do too. It always has permission to give us some downside volatility. It's not going to, though. In my week plan, I was just talking so much crap on everyone and anyone that's trying to sell this market, just as a way to motivate sellers, and it did not work, clearly. Nick, I hear you talk about Summer Snooze Fest a lot. You think single stocks will help? Well, I mean, anything could help. It might give us more stuff to look at and try to trade. I'm not saying it's going to keep the indices out of just snooze or sleepwalking higher all summer, but I think it just it'll make me look at a few more instruments here and there. I'm hopeful that they're going to be liquid, that there's going to be some decent volume, that it'll make sense to actively trade them so that I can bring them into my eyeballs and potentially watch them to try to trade. I mean, as much as I've been obviously talking crap too about the indices, the last couple sessions, the last like week or so, like GC and CL have been the better trade. Like, and I've actually watched it. I haven't pressed a button in the damn things, but enough so that I at least can acknowledge I'm an idiot for continuing to stare at equities for the most part if I'm trying to find, decent two-way action. Nick, is the volume order flow on your chart included in NT? Yeah, the order flow edition will give you the ability to add this one, so the far right volume profile, which for me is the RTH session. We're going to be releasing a free version of these swing leg to leg delta and volume profiles. So that's going to be coming. Nick, is it possible to trade SIM on the free DOM while my Ninja chart trader is set to the cash account? That's a good question. I don't know, because I guess I've never tried to do both, because I usually, when I've logged into like a prop or whatever, and when we were playing with the DOM, I was only trading prop accounts in it, and like SIM accounts, I just didn't trust, as I was beta testing the early versions of it. Like, I wasn't trying to do it. But keep in mind this too, like even now, like I don't execute on the DOM. I'm pressing buttons on the side. I'm watching the DOM. I mean, that's how I usually trade too. I usually am hotkeying in and out on my keyboard instead of actually like trying to manage it. And then I usually manage it by sliding up and down on the charts. So it's kind of rare that I'm truly like adding like 1-2 lots on the DOM. That's just my style. I never got comfortable really truly executing orders like in and out on the DOM outside of just pushing, buy bid, sell ask kind of stuff.
VS, you're asking about the position tracker on my screen. And what locked means is if I were to get stopped out, my stop is below my entry in this case on that short. And then you have the profit on the trade is where the targets currently are, what the math would be if they were to be completed. And the risk is vice versa. So you can see on my GC what my risk is if I were to get a full stop out. And then same thing with CL. I've taken a third of that position off. If we run down to my targets, which are quite a stretch from here, that would be my profit and so on and so forth. So that's just the risk, the profit, and the stop position on the chart. Okay, so we had a 50% rally out of last April's lows. Can we do it again? That would be insane.
Why not? There's a nice little iceberg guy here at 98 in ES.
I don't have a good reason why not.
There's somebody just sitting here continuing to shove 4,000 plus lots at 98s. And see if they leave the building. Nope, another 10 just came in there. I guess he's done. Man Dude says, yes, you can set the free DOM to use a separate account than your NT chart. So you can have the dual going. Touchdown 29,000. Yeah, probably. We're probably going to be there. For all I know, by tomorrow.
Casually bid 200 from the open here in the NQ.
I mean, look at this is absolutely insane.
I have orders in it, but they're just not coming down into them.
26% just straight to the upside.
Is that how much we're off the low? 26%
from 23K? Yeah. My low of the year call is looking real good no matter what happens at this point, because it would take a real Armageddon type correction at this point for us to probably take that out.
Let me know next time you do that. I'm gonna buy some 30 Delta calls.
Oh, I did the same damn thing I did last year. Like, I barely bought anything in my retirement account and stuff like that down there. Like, versus really feeling like confident in this is a good spot to do some long-term buys in a variety of things. Software, for example, maybe it would have been a genius idea for some of those names. And here we are, 26% higher. And I did the same thing I did last year when we were trading around 5,000 on the SPOOs. Where just a couple grand. I'll throw into the Roth. No big deal. Just a decent first buy here. And then it's gone before I continue to decide I want to add more. Idiot. It's the only way you learn. You got to take the pain watching it continue to go without your full position. Like me being long long couple MNQ contracts at 23,100 and change and only having like a 60, 80 point scalp to show for it. Oops. Well, thank you, Robin. I appreciate that. Yes. USA NC trading. Yes. Your sim funded accounts are in fact simulated funded accounts. The live accounts are different. But yes, that is factually true. Oh, hey, Business Duck. Mm, no. The live account is not simulated money. Why? How do I know that? Because that is, in fact, actually on the book. You can see it. Are they part of a larger parent account? Probably. But those are, in fact, real orders that did get executed.
All right, so my timer on my gold went off, so I do need to move my stop either above my entry or take a target. So I'm going to move my stop above my entry because I still think we're going higher. So just below that local low, protecting my position.
Nick, what is the best platform to replay order flow? I mean, I think a lot of the major platforms have a replay function. It just depends on kind of what you're looking for. Yeah, Ninja's got it. All the other major ones do. I think TradingView has a replay mode. Do they? Actually, I don't know that. Don't quote me on that because I don't actively use TradingView for anything outside of just basic charting. But yeah, Ninja's got one. Ninja has replay that you can go replay sequences. It's always an easy way to do it. TradingView has it. Yeah, I think honestly that's like a standard feature on just about every trading or charting platform. So play around, see what you like. Start with whatever you use first. But yeah, okay, that is the gotcha though. Yeah, TradingView, it would not be good for order flow because they don't use tick data. So you can't actually see delta and stuff. You can't really watch order flow on the DOM the same way. So that's a good caveat there since they don't use real volume data.
Took one off on gold and moved my stop up, so just locking a bit in. Just kind of really not doing a whole lot here, so. Need to pay attention to when those other indexes bottom. I am interested in flipping, taking longs in the weaker indexes here because they've gotten pullbacks, and I have a bottom to trade against. So I'm just kind of looking for signals actually in YM and an order in.
But speaking of this, like order flow sequence replay stuff, XY and I are going to be bringing something out for you guys that will be in that realm. We'll talk about and walk through certain sequences live and with replays of sessions and moments that we want to talk about live. So that'll be fun. And in the format and how we're going to do that, we're still figuring out, but it's going to be, that's kind of a plan for, I think certain things we talk about when we do it live, it's hard to obviously stop and explain. And suddenly we're not obviously jumping back and showing you what we're seeing on the DOM, but we understand that's what people want and want to continue learning and helping. So we're going to try to do some variation of that in the short term for everybody. So more to come. Nick, we would love to see how exactly you set up your chart and indicators. There are dumb people like me. Well, the good news for you is we are also pretty dumb. And it did, in fact, take a lot of people's hand holding me to set up my charts on just about every platform I've ever used. It just takes time. So do not feel like you're at a level one of just charting and setting up your trading platform. Trust me, we've all been there. And I definitely cannot confirm or deny that Leo may have helped me at some point in my trading career do some basic setup of certain things when I had no idea what I was doing. So a lot of people will pay it forward. And the good news is a lot of the indicators that you see on my chart, some of them are available for free now. Some are pretty standard on any platform, and we're releasing obviously things like the delta profile, the volume profile. Like you could rebuild a version of this pretty easily now with just the standard NinjaTrader. The only thing custom being the DOM and the leg to leg. Otherwise, MGI and stuff, a lot of this is readily available in NT. And then you could even just build some simple Ninja script if you wanted it to auto plot things at scale like mine does. Uh, there's no distaste with Bookmap. It's just not something we use. It's actively, I mean, it's a way to see the depth of market in a different, more visual form that's a little different than what we need. I think a lot of people think and talk about it like it's some magic tool that is going to suddenly make you give you a certain edge above everybody else in the market. But all it is just a visual representation of the DOM and the order book. And I think I just hate I guess when the community has made it out to be something more than just that and tried to put a wrapper on what is nothing more than the depth of market for each product. And there are some people, I would say, that just articulate it better than others, and others try to make it into something that it's really not. And like it's this mythical map of liquidity where you can see all these crazy things and articulate exactly who's doing what. It's just, at the end of the day, a different visualization than what we use every single day. I have no disdain for it. I just have disdain for people that, I guess, try to treat it as more than it is. That's where it comes from.
I got long YM here. So, I mean, once again, just indexes are flying higher. We're extremely strong. We had a sell off in the Dow for whatever reason, waited for that turn and started trying to catch a continuation lower, following the trend bias of the higher time frame, letting a bottom get put in. We basically traded right to Wednesday's open. And I think we're going to go right back up to a new high. Whether that happens today or tomorrow, my eventual target on this down move is 50,430s. So, and I just took a core position, and then I'll probably take a couple of scalps along the way to, reduce my risk for maybe a swing into that 50,400. But that's, that's 500 points from here. We are in a bull trend in the indexes, by the way.
Judged by the, I need a protractor to see the exact angle of this V, but it's about as tight and small of an angle that I've ever seen in the markets.
Yeah.
I literally would need a protractor, but this has got to be like a 10-degree type V that we have just done 26% straight to the upside.
That's right. It's a bear market rally. It's a really nice bear market rally.
It's an acute angle, yes, for our geometry enjoyers out there in the space. It is definitely not obtuse.
This is Ronald McDonald autographed. He cooked in this.
Yes, if I stretch my chart, it'll not be as acute. That is very true. Unfortunately, I have mine, when you're looking at it on the daily, it doesn't help. we got, what is the time? Is it? We got about 6 minutes left with Jack and I, and then you guys will be in the wonderful hands of XY. And who else is Salma? I think Salma's with them. Unless I'm crazy. So you get to hang out with those wonderful folks. And just because we're getting close. Has everyone registered for the Arena Cup that is coming up over the next few weeks? I will be trading with Stowe in qualifier 1. Jack will be in qualifier 2. I don't know who else, but if there are still spots available for qualifier 1, you want to hang out with me, Stowe, and another. I think Lumi was in that one too. Just a good group of us trading the first qualifier. Feel free to register. Make sure you've only registered for one of the 3 qualifiers to put your name in the hat for the final round, which we will be giving away $100,000 to the number 1 trader of the competition. So that's gonna be a lot of fun.
Prize.
Yeah,
100 racks.
Not bad for a completely free to enter competition, and with 1 day's worth of work. So if you have not, feel free to register. Totally free, even if you're just trying to have some fun, hang out with us. Each qualifier, just give you something to trade that day. Yes, this market is in fact a meme. I think we have said that ad nauseum on this show before. Like just meme.
Yes, I am live on Discord every day except days where my house gets struck by lightning or I'm out of town.
I want to watch Jack trade in Discord. Why are you gatekeeping the mod credential for me, bro?
I'll give you one.
No, I always like, because I know a bunch of people. I know a bunch. I should. I'm in like so many random Discords from the exact same situation. We're just trading friends that are in the space who run them and have them. Just like add me, and then I never actually go in. And then randomly, I'll just like post a meme or something or a GIF and then we'll go back to not even lurking for the next 6 months. That's me. I was anonymous in Discord for like 3 years. Like I did not have a public facing profile for the trading persona. I just was a random anon.
Yeah, and I do not do any promos or like promo codes for my Discord. If you want to join it, join it. If you don't, I frankly don't care. I don't need it. I keep it small for a reason.
The Trader Cup has risk rules. Yes, there's size limits. The account is specific size, and you can only trade certain instruments.
Just getting a move on, and why I'm here. Just going to continue to try to add to that position, but
can you trade on Tradeovate for the Trader Cup? You can. That's likely what you'll be seeing me trade because I have learned I'm a better trader trading multiple instruments when I just use the NinjaTrader web app or Tradeovate. It just is easier for me to pull up a bunch of DOMs and a bunch of charts very quickly and just kind of efficiently move between product and product and manage it with multiple screens because I can slide the different instruments over on other screens. So it just has made my life easier to do for these competitions. It's a little weird though, because then I'm not trading the same type of way I am as far as volume and other things. Like I just suddenly I am definitely trading more on vibes during the competition. That's probably the best way to describe it. And the vibes last Thursday when Jack, Chris, and I were doing the end of the month competition was I suck at buying the all-time high at the highs. And so if we can't find a pullback, I am probably going to lose this competition, which is exactly what happened. So fair play to Chris, who did win, but looking forward to this next one. God, even the weekly profile for, I mean, it's Thursday, but looking at the structure down from, even basically opening at the previous week highs, we've just continued to launch another 1,000 points higher every week.
Insane.
Crazy.
Gotta be pressing. If you read into that guy who like they blamed for the flash crash out of, I think it was like, must have been the 09 low. He just got really good at like, he didn't have that much money. I want to say he started with like $50,000 in futures, and which is like basically that one-way bid market, and just got so good at picking entries that he racked himself up to a $50 million account from 50K, which is fairly impressive.
Insane.
Yeah, and just trading the one way to the long side. He would spoof orders down. Basically, what he was doing, he was spoofing orders down into his entries and then flipping them. And he was doing a little bit of gaming going on, that's for sure. And then they definitely put all the blame on him, and he spoofed a little too hard and sent the market 1,000 points lower, which was a lot at the time.
Right.
Not anymore.
Hey.
Hello, hello.
Hey.
Good morning.
Good morning. Good morning.
Dang, Jack is in 3 positions. Huh?
That's Jack for you.
I got a lot on right now. We're pressing, baby. The market's hot.
You know what it is, man. That's that Ronald McDonald aura.
I'm cooking. What do you guys?
What's that machine that's always broken, like the Frosty or whatever?
Yeah, the ice cream machine.
At McDonald's.
Yeah. It's always broken around closing time for some reason.
He has to go fix it after the stream.
I do. Well, I'll tell you what, I'm not going to be doing much
Let me see that hat.
This.
Look in the camera. Let me see that hat. Ooh.
That's just an AP hat. It's an AP hat with the McDonald's shirt.
I thought it was McDonald's yellow. I thought you got the full getup on.
Nah, it's just the gold hat because I came in the day long gold, so I wore the full outfit to represent my positions.
Did it work? Wait, long gold. Of course it worked.
I was long gold basically all night. I had like a $25,000 trade in gold overnight.
Yeah, you held it overnight?
Yeah. Well, I mean, nice. I've been pounding the table like every day last few days I'm on, then I'm like looking for that. I was been trying to just pick in, and then once it starts going my way, I just add and manage my stop around break even. And
weren't you getting long gold around like the 45.60s or something like that? I remember you saying something like that.
So 45.66 was my upside target here today. And that was like that first high we made.
47.66.
Yeah, 47.66.
But you've been long for like 200 points gold, no?
Yeah, well, I mean, I've been in and out of it. I did start getting long before the Wednesday night in the Asia session, the Wednesday night rally, and that was 170 point. I mean, top to bottom, 170 point move. I caught about 100 plus of it, and then I just, as the way I look at gold is kind of like, I mean, it's not going to trade exactly like the indexes, but we're really starting what I think is a run up to all-time highs in gold, and we're still pretty low, relatively speaking, in its most recent range. And I'm going to just try to be there in the pullbacks because those are my best performing trades, or trades where I can get in and then swing for that new high because my risk reward ratio just goes super high. And, and I also trade, I go in from like having a multi-target strategy to going all in, all out on my trades. So when we're more range bound, I take partials because a lot of times it's back and fill stops, etc. But if I think we're trending, I'll just go all in, all out till it stops working.
Yeah. Well, evidently, that was quite a trade.
Yeah.
Good job.
Good hold.
Thank you.
For all those who are always in the chat going, take the profit, take the money.
Yeah,
you won't see stuff like this if you always do that.
That's for sure. You guys got anything going on? What you got doing this morning?
Nothing.
I am probably done for the week after yesterday. I've made that choice. It's one of my hard rules. If I decide that at any point during the week, I have to stick to it. I cannot place any more trades.
Was yesterday good or bad?
Oh, XY got long with 420 guy and held it probably for 400
I
points.
did about like
Holy crap.
24,000 yesterday on longs. So,
Nice.
but that was coming off. I sized it a little heavier because I was coming off a really hot Monday and Tuesday. So that's 3 days where like I would say I had outlier P&L. And it's tiring too. When you have outlier P&L, I mean, it's because you're like trading your ass off, right?
He's tired of making money, guys. You hear
You're
this?
just mentally you're burnt. I'm spent. So yesterday I made that decision, like, you know what, you're done. Just take the rest of the week off. And every time in the past that I've gone against that, it just doesn't end well. It just there's sometimes it does, but when it ends in regret, it's really bad. So that's a hard rule for myself. If I do make any choice during the week, like, hey, that's it for the week, I have to stick to it.
Yeah,
So,
that's smart.
A good
I feel
rule.
you on that.
We will leave the chat in your very capable hands as Jack and I skedaddle out of here. So,
All right, take care, everybody.
Thank
See you
you
next
guys.
week.
Congrats on
Bye,
your
guys.
trade, man.
Yeah, good
Thank
job.
you. Thank you. Bye.
Yeah, my Italian brother. Because remember
Nick
when
wanted
X
out.
traded micros for 2 days? Yeah, I hated it. So I won't do that again. Sorry. Yeah, I mean, I was looking at it earlier. I was like, oh, I could just buy this 9 EMA right now. And I mean, it ripped up like 60 points, almost 70, right? But rules are rules, man. Rules are rules. The satisfaction of making money on the 9 EMA long does not even come close to the pain of what could happen if I break that rule, you know? There's something
Yeah.
about being where you are on the high water mark, and then now you're just like giving it back. You're like, well, I could probably make that back. I mean, we've got plenty of time in the day, and if it happens to not be a great day, then now everything sucks. So certain things you have to protect yourself from. This is one that's very crucial to me.
Like that's another thing too, is like I think we tend to forget that every time you put on a trade, you are exposing yourself. There is a 50-50 shot that you either are losing or you're winning. And so, yeah, you're doing the right thing. I mean, for what? To make another 1,000 or two when you just like literally made such a big amount that be insignificant. It wouldn't make sense. Unless you honestly, like, if you took that trade earlier and you just went like couple micros, but that's not even your style. Like,
Yeah, so I was thinking about it yesterday. I was like, oh, because I'm still streaming, I could trade like real small, maybe just a one lot. But
Yeah.
that would kind of break down my process. It starts to change and break down my process. And I just don't want to touch anything. I want to leave it exactly how it is. You know, nothing of outside influence or me just trying to change something. So I think it's what's best for me. So sorry, guys. My week is done. It's an early weekend for me.
That's
After
cool. That
yesterday.
means you guys can flood XY with a ton of questions
Yeah,
and
you
make
guys can
him
ask
work
me.
overtime.
Ask me whatever you want. Generational buy at 29? I know I will. Rules are rules. Every month the generational low gets higher and higher. So I'll be all right. Trade one prop account or NinjaTrader sim. Yeah, but that would I don't want to say erode, but it would definitely be a different process. And this is the worst time to try to do things that are systematically different than what I have been doing and what's worked so well for the week. You know what I mean? So prop accounts, the issue is the biggest size is 150K. It would allow you like a 4,500 drawdown. That's so outside of what I'm used to that now I'm just throwing myself back into this hamster wheel that I finally broke out of years ago. So it's different. You can always do other things and sim. The risk with doing sim just to do something is you will break down your process because now it's not serious. It's so unserious because it's fake money. You know, I'll do this, I'll do that. when you exercise, you think in your mind it's just sim, it's fine. This is not my real trading, right? You'll have those. A lot of prop traders are like, oh, what I do on eval is not my real trading. I'll do my real trading on my fundeds, and you wonder why do they never go to a cash account then? Because you're exercising that muscle over and over, thinking, oh, I'm not though. I know the difference. This is me on try hard mode. This is me on mess around mode. And you never go to a cash account. You're just in prop forever. Why? Because you keep exercising that muscle and you never learn how to just contain yourself against, all these other things. It's a hamster
So what's
wheel.
your advice to that?
Trade seriously. Separate the two. I think in prop, yeah, you definitely make way more, gamifying it. And we can see it all over YouTube. We can see it on these super fancy roundtables and all that stuff. I've made $16 billion trading prop. I don't trade cash, I still trade prop. So it's just this hamster wheel, right? You're exercising that muscle over and over, not considering the possibility that because you're exercising that muscle constantly, you'll never trust yourself on a cash account. So the thing is money in, money out, right? If you gamify it, you'll make more money, but it's money in, money out. You spend it, you blow it, you make money. You spend it, you blow it, you make money. Over time, you're profitable. Beautiful. But I like cash where you make it, you take it. You make it, you take it. There's no spend. You make it, you take it. Just don't blow it up. So I'm very, very diligent on not going back into that hamster wheel.
I
I hope
like
that
it.
makes sense. Very ranty, I know. But these are the things that I tell my own friends often because they're in prop. I would advise, yeah, it sounds ironic. I would advise everybody who's starting out, you got to go prop. You will save so much money. I wish props were like this when I started. I would have saved so much cash,
Yeah.
but I burnt
Yeah.
through so much of my own. But if you ever want to graduate to a cash account, know what it takes. Your daily drawdown no longer can be your entire account. You can't gamify the real markets. You can't gamify a real account. But it
Oh, there you go.
requires
Someone asked a question that I was going to ask you. How much would you recommend to start like a cash account with if you're going to start small with like micros? And I'd say you're not going to swing. Like basically the same setup that you have on prop, prop like you got to be out of a position by 4:45 or whatever. And you're not swinging overnight. So like what would you say is a good count balance to start with if you're transitioning over?
I am assuming for the sake of this situation, I am assuming that you've already traded prop and that you to some degree can preserve your account, not blow it up over a bad day and tilt.
Yeah.
So how I do things is different. I put enough to get enough margin, right? I do believe in the standard $10,000 for one mini, $1,000 for one micro. So depending on your size, you want to do 5 micros, 5K.
Okay.
There's a huge thing here about blowing it up. You can tilt and blow it up. So for me, I only put enough with the margin because, well, I don't need all that capital in it. I don't need it to be in the brokerage for me to, one, potentially blow it all up. And two, if I'm not using it, you can just wire in. These days, you can wire in and get your money in there by the next day. So there's no point in me just leaving it in there. So I handle it differently. But if this is like you're going to treat it like your actual cash account, you trust yourself not to blow it up and stuff, I would say the baseline, like long term. This is your long term play. This isn't like the YouTube guys are, oh, watch me flip 5K into friggin' 100,000 or some bullshit like that. If this is a real account, you're going to treat it like such, reasonable gains, percentage based, risk. 1,000 per micro is where I would be. But if you are newer to the game, I really recommend props, honestly. You would save so much money when things go wrong. Your risk, essentially, your downside is capped to the purchase price of the account. And that's going to be significantly less than the actual money that's pulled into the account. And if you do that and you blow it up, I feel sorry for you because I know what it feels like. Yes, what I am describing is extremely hard to do. And that's why everyone trades prop. But I think that's a good thing that you're self-aware enough to trade prop. I would certainly do so. Absolutely. So I don't know who asked it, but I hope that helps you out. Coming in with the extreme value area this morning. Yeah, well,
Okay,
if I'm
wait,
not
wait.
trading, I can rant. Salma can trade and I can rant. So
Another question for another follow-up question. So you start your cash account, yada yada yada. It's going good. How often would you pay yourself in comparison to, like you know how with like props you gotta either wait 3 or 5 days depending on the account. So like how often would you pay yourself,
I do,
assuming you know you're green at the end of the
right. I
week
do
or
want
at
to
the end of
answer
the
this
month?
one first. Someone said I don't hold 10K per mini ES. I would have to lose 200 points. Not going to happen. I'm comfortable with 4K margin. So yeah, that's why I do it margin based. I'm saying more so 10K as if you don't have 10K to allocate for one mini, you should not be trading that size. So this is more of like a less of a how much do I need to operate an account versus dude, if someone doesn't have 10K and they want to trade minis, oh my God, you're gonna be a frequenter in the soup kitchen. Promise. Right? So it's about the size, like how much risk can you truly stomach? That's kind of what I meant. If it's like 3,000, 4, 5, $6,000 is all you've got to put into an account, and you trade minis, you're cooked. I promise you. I promise you, you are absolutely going to be cooked. You'll make some money, sure, but that account ain't gonna last. That's kind of what I mean. But if you have plenty, yeah, you can allocate enough for margin, which is what I do. I allocate for margin. But yeah, the what you just brought up, can you say that again? What was that?
Oh, just like how often would you pay yourself
Oh
if
yeah.
assuming that you're green?
For a while now, I would say maybe like 2 years. It's every week. So I pay myself every week.
All right, cool.
But that's a slippery slope depending on like P&L swings. So it's very personal. I think that's a very personal thing. P&L swings and account size. Um, I do it weekly. I just go back. But I think monthly is also fine or even bi-weekly. I think that's a personal thing. I'm someone who strings together green days pretty consistently. So doing so on a weekly basis doesn't affect me. And it kind of makes it real, you know, like during the week as I'm trading. So even up to yesterday, it didn't feel real to me. Yeah, you're doing all this, the numbers going up, but it's just numbers on a screen for good, for better, for worse.
So, do you like, let's say you started your account with 5K. Do you always, anything above 5K, you would withdraw and then bring your account balance back to 5K? Or is it, you know, like how, basically, I'm just asking, like,
I
how,
would say so. I would
okay.
say so.
So you pick a number as what you'd want your account balance to be, something you're comfortable with, you know, having in
Right.
your account to lose, and then
Because
basically
there's a reason
resetting.
you put the 5 in the first place. That's what you think is comfortable, is enough for any potential maybe margin. Like there's a reason you had allocated that 5 in the first place.
Yeah.
So you should have that remaining in there as best as you can. And if you're under it and you still withdraw money, the risk of ruin on your account just will increase. Unless you size down significantly. And now it's like instead of trading 5 micros on 5,000, I'll trade 3 micros on 3,000, and that will be my new baseline. But then there's also that mental part of like, man, I just lost 2. I got to make the 2 back. It gets really dicey. It's very personal.
Yeah.
I'm not sure there's a perfect answer for that. I know there isn't.
No, it's not about perfect answer. It's just about
Yeah,
like
yeah.
what would XY, like what would XY do?
I would see it as there's a reason I put this much in the first place, and that's what I'm going to operate with.
WWXYD. What would
Yeah,
XY do?
honestly, my accounts, I'm not sitting on like 100K straight in there. When I earlier on, yeah, I would always do 100K. 100K is the baseline because I'm like, well, I want to trade this size, I got this. But now, like, eventually you realize, dude, you can just wire in. Why leave that in there and make it at risk, right? Same way as anytime you open a trade, there's risk coming on. So you're to me, it's just anywhere from 25 to 30. It's enough to cover my margins, right? If I want to go bigger, I'll probably go to like 40, 50. But anything other than that is just going to be money I'm not using. So my baseline is anywhere from 25 to 30, 35 right now these days. And whatever's on top, I take it out. So, I mean, it works, right? And I don't feel that there's so much at risk. On any given day, the most I can lose is that if I completely unravel. And I mean, my trading's done live. Yesterday, I literally doubled my balance, like live on stream, right? So be take it personally. What I do, what Salma does, what someone else does, might make sense for them, but might probably not for you. Risk and financial allocation are so personal that you can't really be like, hey, XY, what do you do? I'm gonna do that too. It's very different. Risk and financial allocation is extremely personal. I'm not one of those guys that's gonna be pumping out like content like you gotta this is what I do, you gotta do it too if you really want to make it, because it's not that simple. It's very nuanced. Michael Moore, my contracts range really depending. I mean, there were days where you guys would see me trade 2 or 3. Some days you guys see me with 15 lots on. It's really dependent on many, many, many things, market conditions.
Yeah, Claudio Lopez, this is what I do. I ask the questions everyone else is thinking. I think me and XY do this every single time we're on together. I'm
I
the
think you
question
did a good job
asker
at it.
and he's the question answerer.
When I was trading props, how did I trade them? I scalped a lot. Back in my day, man, everything was intraday trailing, man. You didn't really have much in terms of end of day trailing. It was all intraday. So that it really sharpened like my scalping skills, because I was forced to do that, honestly. Yeah. Daily loss limit, it varies. Um, I would say anywhere between 4 and like 7. So usually around 4 or 5, I'm already getting the message. I'm like, hey, look, it ain't going your way. But it really depends, right? On what size I'm trying to allocate on the day too. If I'm trying to trade like 8 to 10 lots, or 12 lots on any given on a day, 4K isn't really much, if we're being honest, right? In terms of room. So it really does depend. For me, it's there's a point in your trading on that day where you're just like, look, you're getting washed, man. Just give it a rest. Just come back tomorrow. Clearly, it ain't what you think. And that's fine.
Russell's dumping a lot here.
How many scalps do I use? I don't know. I don't know how many scalps, but I know I would try to go for like a daily, like an average. So it's like not like I have to hit the average, but all right, this is good enough, right? There are rules and this and that. The prop is like the game within the game. If I size larger, do I take more aggressive TP? My TPs are not dependent on my size. I mean, yesterday you guys see me hold 9 lots. TP1's 40 points, and I only took like a third off, maybe even a quarter. So it really just depends on the trade. It's not the size. Yeah, it takes a few times getting washed to know you're getting washed. Absolutely.
Oh,
Absolutely.
tape's picking up here.
I don't have a limit number of trades rule. I more so how long have I been trading? If I'm trading still like after an hour, what's really going on? If I'm still trading after 2, it's not going well, or it's going very well. So the longer I'm trading, the more extreme it is. It's either really bad or really good. But yeah, usually I pretty short. Maybe like some days it's like 15 minutes, some days it's 10, some days it's an hour, some days it's 45 minutes. Really. Current day. All my IB is current day. First hour.
NQES pushing up here. YM Russell dropping. Crude is pushing. What is going on?
Well, at least the tape is a little sped up now.
Yeah, just I'm seeing that too pick up.
They're really trying hard
Scary.
to crack this area. I don't know if they'll get what they want on the sell side, but they're still aggressive.
It's funny because I came into today bearish based off of ES 4-hour. And then I mean it looked good like off the open. We were dropping and NQ was way too damn strong off the open. Took ES with it and ruined a really nice setup. And now I really don't know what they're trying to do here.
They're trying to break this thing. That the selling is very aggressive. And it leaves two things. If they don't break this, yeah, they're in big trouble. And if they do, we do have the added information. There is a passive supportive bid here. So if price does break and go through it, it means for the first time today, really strong bids are not getting continuation any longer. That's a huge shift in order flow. So whatever the market does from here, it's definitely very key information. Both sides very aggressive in this range. Whoever comes out on top is likely the person to bet on.
And
Iran is non-committal right now. Yesterday, it's looking good. Today, it's not looking so good. Tomorrow, it'll be looking pretty good.
Hey, XY, did you know we won the war like a month ago?
This is America. We never lose. Never lost.
We're going to be so
Iran
tired
can
of winning.
outlast his blockade for months. Time. I hope it helps. Yeah, I can get really ranty because a lot of things, it just reminds me of like when I started trading. So when I speak, to me, it's like I'm speaking to that younger self, the younger trader, the things that I wish someone had told me. So I can get real ranty. It's never personal. It's never directed at anybody. It's just in my mind. It's the stuff that I wish I were able to tell myself.
Yeah, it's all good stuff. It really is. Here we
Did I
go.
watch the
Yes,
Spurs?
just
Of course I
wow.
watched the Spurs. Yeah, so
All
they
right.
just cracked through insane buying.
Yep.
Like there was a big passive buyer, and this information, guys, is right now there is actually more sell interest than buy interest until things change. Right? They're gonna retest it.
Yep. I mean, ES is almost back at its midnight open.
Oh, ES went to VWAP. But it is back in that main range that it finally crawled out of and could not hold. It is dicey. But if you guys like longs, you want to see them reclaim the range up here because it means when they finally got continuation, selling dried out. And that means probably a new high. So this is going to be the key spot. Does the offer still show willingness to enter into this range that they broke already? And if they do, yeah, it's very dangerous for longs.
The only thing I would say is a little bit worrisome if you think to go long is just the fact that Russell is literally a couple points away from making new low day. It's really, really close. And so is the YM.
Yeah, if they can't trade the 870s and Q, the longs have zero strength. The upper part of the range they left.
870s. Okay.
It's just the upper part of the range they left. Because the selling pushed through the range, and if they're able to lock price out from transacting up there anymore, it means, hey, look, we're not done.
This is crazy, dude. Crude about to make new high day. Rusty does matter. Matters to me.
Mr.
Plus-
Valentine, margins is about 1,000 per, I think. ES is probably less, maybe 500, 400, something like that. NQ is about 1,000 or 1,200 or so.
Hey, did you know what Stowe's cat's name is?
I just found out it's Rusty. I'm looking at the chat.
Yeah.
That is such a Stowe's cat name, honestly. What the hell?
And it's an orange cat.
It's like, I'm gonna name you Rusty.
It's so funny. The other day, I accidentally called his cat Russell, and he goes, "I'm gonna start calling him that when I'm mad at him."
Like scolding your kid, you call them by their full name.
Russell. That's such a rough name.
Did I listen to Salma talking about being a DJ with basketball parlays?
Oh, you
Were
do parlays too?
You from the East? You're a Knicks fan, probably, huh?
Yes.
So what you doing? What kind of parlays you cooking?
Just player points and threes. Nothing too crazy. I had 3 slips going yesterday.
Nothing too
Lost all
crazy.
3.
Just player points and threes, and I got 3 slips. Nothing. Real calm.
Yo, I have
Did you cash, though?
I'd have a 20 leg parlay, and I get mad why I didn't win. This
Nothing
is why.
crazy. 20 leg parlay. Oh, something light, something calm. Just
I'm
for
not gonna
fun.
lie though, it came real close yesterday. It's
course it
always
did.
just real close.
They always do. All my friends who are parlay guys, like, I was one leg, man, one leg. I'm like, yeah, well, when you got 8 of them on, yeah, there will be one leg that doesn't hit.
You just keep chasing the high of the almost.
Of the 20R cash,
I'm not gonna lie
50,
though,
50R cash.
it makes the game that much more interesting. And at least for me, I just started watching basketball maybe 2-3 years ago. So just having by the way, I only put $1 or $2, nothing too crazy, guys, before you all come at me. But just having the slip in front of me and I'm monitoring it, it keeps me more engaged in the game.
I'm the opposite.
Now I know how many points this player has. Now
Oh, so you put the bet in before knowing any of that? Oh,
yeah,
you mean currently?
well,
You mean currently, not what they average.
yeah. I'll just I'll no, but I know the Knicks really, really well. So I'll know Brunson's good for 20. I know all of that, but it just keeps me engaged in the game. Brunson just made a 3.
I'm the opposite.
No,
Something to note, guys,
fun.
is they finally broke this, and all of this sell volume got ran against. So that's a no-go on the sell side. But yes, I'm the opposite. I hate sports bets, especially player picks, stuff like that, if I'm trying to watch a game, because it distracts me from what's really happening in the game, which is I need I want to see my team win, right? So if I'm betting and it's a game where it's say it's a Spurs game, I want to see the Spurs win. If that were the case, I'd probably do a money line or a spread only. No specific player bets, because now it's give the ball to this guy. Say I had a player over 15 points and the Spurs are winning, but this guy hasn't covered yet, and I'm just focused on, give him the ball, give him the ball, give him the ball. I just want to see good basketball. But when I've got player bets, I'm no. Screw your good basketball. Give this guy the ball so he can chuck up more shots.
Money line doesn't pay though. That's why having a 10 leg parlay
money line doesn't pay
because so
it hits at a more frequent rate, So
yeah.
remember last year, Eagles Bills. I was in Vegas, and the book had this offer. It's you do 250 and we'll give you extra 250 as leverage. I'm that's free money. Even if you lose, you got to take it. right? It's free leverage. So I literally got 250, and I slammed that on the Eagles money line, and then I got the other 250, slammed that on the Eagles money line too. One of my friends, she didn't want to do the full amount, so I was like, I'll take whatever action you're not going to cover yourself. So all in all, I think I netted out at like 3K on that Eagles win, and I think I only put up like, I don't know, 7 something.
Yeah, I
But
would
it's because
never
it's
in
a
my
money
life,
line, you know?
never in my life would I put more than $1 or 2 on a parlay. 700?
I would
What,
hope not.
bro? 700?
It was money
Yeah,
line
no.
straight, and somehow it was pretty even. So I was like, hey, it's not bad. One of my buddies, he always spams like $10 parlays, and when it hits, it's like $400. It's
Yeah,
crazy.
yeah. That's how the dollar parlays I got going. That's how much
White
they
noise,
pay
you're at the
out.
Spurs game? Jealous, man. I want to go on the Fiesta court. That is sick. So whoever in the chat has been to one of the playoff games on that Fiesta court, dude, jealous, man. I hate to say this, but OKC is not going to lose another game. I was hoping the Lakers could at least take 1 or 2. I don't know, maybe just 1. But after game 1, I'm watching completely different basketball, honestly. Jackson Hayes is likely missing a brain. Um, DeAndre Ayton has not realized that he has legs yet and can actually run sometimes or like box out. I'm not sure he knows boxing out is a legal basketball play. LaRavia, he's not the smartest guy either. Lakers don't talk on defense. You can see that. Kind of just standing around assuming that everyone else is going to do the other thing. And then OKC can have a SGA under 20-point game and just give them the work. So, yeah, the dream's dead.
I don't
I've
know
seen
anything about
untouchables.
anyone other than the Knicks.
Other
Although
than
I do
Jalen
know
Brunson?
SGA. No, I can name you all the players on the Knicks, but I don't know any other teams
Who's
like
your
that.
favorite player? Is it Jalen Brunson?
No, it's Mitchell Robinson, actually. I think he's the GOAT.
He's probably the longest tenured Nick right now, right?
I don't I don't
He's
know.
been
I don't
on
know
Knicks
stats
for a
like that.
minute. Yeah,
But
he's been off and
he
on.
is
He's
just a
legit,
unit,
though.
dude.
I like
He
his game.
is, yeah, the GOAT at free throws. Yo, NQ Maverick, you're savage, dude. They
NinjaTrader
purposely foul
Live.
him too.
NinjaTrader Live says Brave says NinjaTrader Live, big sports show.
You never know what we're gonna talk about on
I
here.
feel like Stephen A. Smith.
Yesterday, Tanya called up her dad, asked him about gas, what kind of gas to put in her
On
in a
stream?
car. Yeah, on stream. He was on speaker. So you
Well,
never know,
guys,
guys.
look, they failed that sell. Like, this is what patience gets you. It gets you extra information. Market finally breaks that huge buyer, goes down. How come they're not continuing? Back in this range. And now they're trading above the 870s, like we pointed out earlier. And there's a bid that's stepping up. If anyone's looking at order flow, the bid is not only absorbing the sell up here, it's trying to buy through it. So this is the next spot where they're going to make a choice. Is this going to be a failed attempt to make it back upside? Or do they hold the selling all the way up here now, which they weren't willing to do earlier? They were not willing to do this earlier because if you look at just the price, these are wicks. They were not willing to step up. But seeing what happened in the market now, down here, now they're willing to step up here. Right? This kind of gives the information. If you want longs, if you need to buy, you probably won't get the chance to do so down here anymore. Because look what happened, right? The selling dried up. You got traded against through the range. The interest has gone through and stepped up. And you're getting what you see now. This is much different than this. But it came off of this decision. So if you wait for the market to make decisions, you'll be able to make better ones yourself. And that's something like I think on every page of my playbook, it outlines that. Market's going to go here. It's going to make a choice. The choice leads to here or here, gets to the next spot, makes another choice. Eventually, you can really paint a full picture.
It's all choices. Is that what you're saying?
Choices. Let the market make its choices. You don't have to be engaged in all the market wiggles, right? Just because it broke doesn't mean you got to chase the shorts. Just because it failed doesn't mean you have to chase longs right here before anything's confirmed, right?
I still think this is so iffy here. Like I don't like this. You have YM Russell trying to drop. Obviously, ES and Q have a little bit of strength here, trying to pump. Don't like this at all. Really don't.
Potential
Even,
upside. I mean,
even
I think this can
yeah.
definitely crack a new high of day because what happened was they broke the IB and they failed back into the range. They got back into the range, and where'd they go? Where'd they really get for it? They're bumping up against the IB again, right? So if the market has this information, the confidence isn't really going to be there, right? So they really have to hold this area here because they allow price to essentially poke outside the IB, fail it, come back in, and now it's very evident that failing the IB, getting back into the range, again, getting nothing for it on the downside, it's not very enticing anymore. So I think if they're trading above 900s again, it's not stopping. So yeah, if you like shorts on the flip side, I mean, I see some people in chat that like shorts. Wait for another failure, right? If you don't want to go long, you just want to go short. See if this fails and gets down and see if new offers start to flood in the market, right? These aren't the same bids as prior. These are new bids that's willing to step up because a decision was made. If you want shorts, maybe they can fail here, go back to these lows and find a new offer that's rushing in, right?
Russell and YM are so weak.
How do you navigate around being too patient and then being late? Late as in like a bad entry? If that's what you mean. You don't have to do all the fancy stuff, right? Like you don't have to have tight stops and stuff like that. Your size can adjust to what kind of risk you need for your strategy. There are plenty of people who use like 40-point stops and stuff, 50-point stops. But it's their strategy. Was that a failed auction? I don't know if it's failed. The word failed auction can mean a lot of things these days. The way I see it is they finally pushed through that seller, had their chance to really drive price. Like if they're pushing through this bid, it's like, well, the intent should be to drive, right? And they push through. And why is it taper here? You see the volume profile has an actual taper. They did taper again. As soon as price reached the spot, where did the sellers go? They didn't show up. The market's not willing to sell here. I don't know how it can go any further, right? The market has to be convinced to engage in hitting the bid down here. They were not doing so earlier. Went down, everyone was like, all right, I'm done. That's it for me. So goes up. Now, if they can fail this, right, there's a lot of absorption up here. They flipped the delta. They're coming back. Now, this might drive new interest on the sell side. Coming back now seeing, hey, look, they trapped all the selling. They tapered beneath them. They came all the way back up, but how come they couldn't push through? How come they couldn't take advantage of this, right? One of two things. This is where volume tapers too. They either hold this higher low, probably break through, or if they get back to these lows, there will be very likely new sell interest piling in, and then you can gauge from there again. This is why on trade setups, I like to see a big enough runway. Let's just say I want to get short with some confirmation and I want to take it off at VWAP. That's really not worth your while, right? But if your idea for a short is like all the way down to like the open, you've got a huge runway where you don't have to FOMO into anything, right? Let the auction play out. You don't have to be getting out here. You could actually be getting in on a break and a retest because there's so much left as a runway, right? Because what could happen on short side if they were to, play out? This is majority volume on the day. There's a lot in here, both buyers and sellers. If price were to trade below this, there's a lot of buying that's offsides. Those buyers will eventually flip to become sellers, and you'll get a huge, strong move, right? But these are all ifs. If the market makes this choice and goes here and makes the next choice. Right now, like I said, this could be a higher low where volume drops off here because they did poke higher. And if the selling isn't willing, and look, selling under the 72s, it's non-existent. How can price go lower if no one's even willing to sell and hit bid under the 72s? It's actually impossible. So you need to have seen a seller willing to hit the bid down at these prices, but nobody did. So where's it going to go? It's going to go find a real seller. I hope that makes sense. I hope it's making sense. You can't see a failed attempt with only candles. Well, I mean, I guess you could in the form of a wick, but
Yeah, that's exactly how you would see it.
yeah, but anything further, no. But yeah, wicks tell a story for sure. Yeah, I'm glad it helps you guys. This is literally like what I'm thinking as I'm framing a market, looking to execute, waiting for the market to make a choice. I'm weighing all these things out and choose a direction and then wait to see what the dealing range looks to be at certain areas. Now that's your risk. Put the risk on and the market either punches you in the face or hands you some cash. Anything beyond that is out of your control, out of my control. Unless you created the algo or something.
But I don't want to get punched in the face. I think I'm gonna go long YM here.
Nah, that's not for me. I think I'll take longs. Not into that.
The hourly looks good. I'm not gonna lie. I just noticed the hourly on YM.
Oh yeah.
Previous
The
hourly candle, doji. I mean, this
NQ is
is
wicking off, possible continuation too.
Yeah, and if it does, with strength, like the way it was doing off the open, I think it can take YM Russell up with it. Even Russell 2 hour looks good. 2 hour. I mean, there's still time on the 2 hour and the hourly to close. Still 15 more minutes. But it's worth a shot here. I mean, if not,
It's
then
really tough. It's really tough on NQ and ES right now because there is two-sided tape up here.
yeah.
And there's a lot of buying, a lot of selling in this little range. ES still has a little high note up there that is trapped still. NQ is not what the buyers trying to buy through this little range are not getting what they want NQ right now. So I can't say I'm a fan of these conditions. And the days range is what, 236. It's kind of muted, but I mean, it's what you'd expect on a market that cannot find a red daily candle for the life of it. So earlier they weren't willing to sell. They weren't willing to sell below the 870s, but now they are. Why? Well, look, there's more information. The buying could not get through here. So you're not really going to have an opportunity to sell these prices. If you want to sell, you're going to have to follow this thing down, right? Same thing with the buyers, what happened earlier here. So these are the mechanics that I'm always paying attention to. Earlier, they were not hitting the bid on these prices, but they are now.
Yeah, the level I have on NQ that needs to hold is about 55. As long as 55 holds, we should be okay for more upside. And then obviously 7,400 on ES.
Hope it works out.
If not, GG.
I mean, that's trading. Never
Yeah.
gonna have the answers. You just kind of see stuff and you're like, oh, I think this can happen. It is what it is.
Why do you have 55? That's 9 EMA on the 15-minute. We've been basically holding the 9 EMA on the 15-minute since the open, really.
Oh, I got some secret sauce for you guys. I don't know if I've mentioned this. I'm pretty sure I have, but how I use the 9, and for anyone in the chat doesn't know, I only look at one 9 EMA. It's a 5-minute 9 EMA. Every time, if a market is strong enough for me to want to just like say buy the 9 each time, the moment a rebid off of the 9 does not yield a new high, that says something to me. If we're in a strong market, up or down, let's just say downside, and they go up, they reoffer the 9, that should result in a new low. New low, go up, reoffer the 9, that should be a new low. As soon as it stops making a new low, I am reconsidering. I'm waiting to see, hey, how come they couldn't make a new low off of this? Let's see, right? It looks like today, yeah, the last 9 bounce, they stopped making a new low. ES the same. I mean, new high. ES the same. It kind of like got weaker. And yeah, the slope kind of died. Something for you guys to take note of. SPDSK says congrats on the gig. I appreciate that.
The gig's been how long have you been here, XY?
I think it was last March the show started, so I've been a day one on the show. I am here because props exist, guys. And I say it all the time. I think if I were trading my own cash the whole time, I would have quit at some point. Just too much money lost. Like, and it's like, do you really want to continue with this? Like, not knowing if there is a light at the end of the tunnel, how far you are from it. There is no gauge. But because props exist, I'm here now.
All right, we're dropping more. What is this? Let's see.
Can you repeat that? Oh, hey, look, you don't have to yell. All right. You ain't gotta yell. We hear you just fine. The EMA in either direction, when it bounces off the EMA, it should create a new high or a new low. So upside, if you're buying the EMA, the 9, you should see the market should make a new high out of it. And if you're selling it, the market should make a new low out of it. The moment it stops, you should be a lot more wary. And it's not to say that, oh, it's over. It's not going to make another higher low. It will be different. It's not as strong, right? In that moment, it's not as strong, and you've got to wonder why.
Tape's picking up here a little bit.
They found a big buyer. 147 lots at 833. Right at the edge of the structure. Only question is, do they even get anything for it? So the selling is still in the market.
It's because we really are at this like make or break level here.
Mm-hmm. If they start trading below 820s, there is huge volume that is offsides.
Yeah.
The only thing that sucks about a short off of that is the VWAP is like right there, about 25 points lower. So that might put a wrench into things, but it could break, bounce off a VWAP, and not be able to trade back into this range and just continue the sell-off. Bro actually thinks people buying and selling is what moves price. I could be wrong. It might be an algo.
Please do tell what does move the
No,
market.
please don't tell. I don't want to hear that.
Please do tell. We have 8 more minutes.
I don't want to hear
Enlighten
about
us.
this super algo that was created by one dude. Big hedge funds targeting retail liquidity like it's meaningful.
Well, hey, at least YM is still holding up here. This is good.
Hopes and dreams.
Salma's $1 parlays are moving the market. Yeah, you're welcome.
ICT moves market. What do you guys think? Oops.
Where's Rakesh? Rakesh hasn't been back, and I haven't seen Rakesh in a while. It's been MIA.
Well, I mean, this is an interesting question. It's multiple algos that move the markets. Absolutely correct. I think what is it, like at least 80% of the volume is algo driven. But tell me, what do algos do? Do they buy or sell, or what do they do? Because if buying and selling doesn't move the market, what do they do exactly?
Let's ask Jim.
There he
Hey,
is.
XY, Salma, how you guys doing?
Hello.
Not too bad.
Fantastic job today. Just, I agree with you, Selma. No one, I don't want to get punched in the face either.
Yeah, I'm not trying to get punched in the face. I'm trying to go long.
Oh my goodness. You still have a position on, Selma?
Yeah, just the YM here. Literally just went green.
Yeah.
Couple points. But I hate this price action.
Yeah, it's pretty tough.
It does seem like it's kind of trying to figure things out from after yesterday.
Yeah.
So I don't know. Why didn't you tell me my hair was crazy?
I was gonna say something, but I didn't want to say it in front of 1,100 people.
Oh, I got thick skin. It's okay. You can say it. Oh my
Chad, can we
goodness.
get some thumbs up for Jim's hair?
Oh, that's worth some thumbs up right there.
Yeah, let's
What hair?
thumb it
That's a
up.
good one. I know. Well, you know what? I'm still
That's
alive. That's
messed
all I
up.
care about. Any event, what's your game plan for the rest of the day? Any you guys done trading for the day, or are you gonna keep paying attention?
Yeah, I'm done.
XYZ's done.
I'll probably still be looking at the market, seeing if there's an opportunity somewhere. Dude, crude
Awesome.
is just pushed.
And Q just failed a
Yeah.
bid.
Yep,
Literally tried
and
to buy back in and got washed.
Russell about to make new low a day. Oh my goodness. Wow.
There we go. Well, you guys did a great job today. Appreciate you as usual. Let's give these two a round of applause, everybody.
I thought they were gonna do a 30 again.
I was
you guys
waiting
did-
for that.
You guys did a great job this afternoon. 2 o'clock start, regular time. Shy with their afternoon update. We'll do another edge report, and then we have Christian, Leo, and Joey trading the close this afternoon. So we're looking forward to that as well. I'm going to hop into a quick edge report right now. You guys, thank you. I'll talk to you later. Oh wait, I won't see you. Well, I'll see XYZ tomorrow, right?
Mm-hmm. With
I
Chris.
won't see you, Selma. So have a great weekend.
Yeah, you
And,
too, Jim.
all right, I'll talk to you. I'll talk to you next week. All
right.
right, guys.
Bye,
Peace.
chat.
Oh, sorry. Hang on. All right. It's been a long day. All right, so I got this chart up here. Now, this is a little different than the last one I showed you. This is gold at the top, right? And panel number 1 is gold. This is just a daily candle chart. Nothing too special, right? It's kind of naked, no lines or anything like that. Underneath it, though, I have some correlations with the U.S. Treasury bond market. And as you've noticed lately, bonds and gold have been going in the same direction, which makes sense since bonds is an interest rate sensitive instrument, and so is gold actually, because gold doesn't pay interest, doesn't like high interest rates. So what I did was I added 3 different sets of correlations. I added a 34 period look back. That's that top. That's that blue, and you can see we're about 80%. Positively correlated. And then the second panel here, well, actually it's panel 3, the green panel, that is a 21-day look back, right? A correlation based on 21 days of data, and that's at 91.4% correlation. And at the very bottom here, we have the final one. It's only an 8 period, so it's kind of shorter, and we have a 80.6% correlation. So all 3 of these things are very, very highly correlated right now. There's not a lot of divergence between the longer term look back and the shorter term look back, which is telling me this is a strong positive correlation that's lasted a while. And right now, until something changes, I think it's going to last for a while. Now, keep in mind, we've had times when we've been at zero or even negatively correlated between these two. So it's not always just up there, right? It's not always just up there. It does change based on, conditions in the marketplace. Now, one thing that you might ask and say, hey, Jim, what about today? Today, bonds are down. Let's see, we're down about 6 ticks, but 0.17%. And gold is doing the opposite. Gold is up about almost 1%, really. So gold is up. So this isn't being positively correlated. This is negatively correlated today. And that's right. Any given Sunday, things could switch, right? This is a longer term look back with a lot of data that we're calculating. But someone might ask, well, how could I use this data to my advantage? Well, if you still think that this is a strong positive correlation, and if your other biases confirm a position trade, then one might say, well, maybe I should go short gold, or maybe I should go long bonds, so they catch up and they get back in alignment. That's a possibility, but make sure if you're going to do something like that, you're going to do it consistent with your regular trade setup, your regular bias, and all of that stuff as well. So that's how I'm using it. So right now I'm looking: is there going to be a place to sell gold today? Is there going to be a place to buy bonds today? And this is how I'm kind of using this information. So and eventually this might change, right? It might toggle to a different correlation, but right now highly correlated between these two instruments. So we'll keep that in mind. As a matter of fact, I'm going to go to a Treasury bond chart right now, because of course my bias is Treasury bonds, and I'll take a peek at a daily chart first, and we're going to see we're still in my consolidation range here, middle part of my hamburger bun, 113 and 10/30 seconds. We're driving back toward that as well. Now we're in that rotation zone between that 21 EMA and that 8 EMA right now, which could suggest further downside movement. And we have that 1301 swing low of September 25th is another target. Now it's kind of, we have a nice shadow at the top of the candle today. We kind of touched that 50 EMA, but sold off it a little bit. Kind of a baby body of a candle right now, but still things are looking still completely negative for 30-year Treasury bonds. And if you go into a daily chart here. Let me try to open this up. Oh, I kind of messed up my volume profile. My bad. But in any event, you can see here the point of control is way far north. It's way far north there. The point of control is at 28, and now we're down at 13. So that's a pretty big move. That's a half of a handle. That's $500 per contract. So that's kind of a big move down, and it's been a steady Freddy sell-off here. This has been really, really nice, kind of a grind down to that pivot. We're sitting here at the pivot right now, and then below that, well, nothing until that 113 level. Remember, we just talked about the 113.01. 113 level is right where that one-day min is, and that 0DTE put support. So I'm going to keep my eye on this to see how it goes today. And not ready to hit the buy button here yet. Not a chance. We're going to let this thing settle out a little bit more. That is this morning's Edge Report. I appreciate everybody being here with us today on NinjaTrader Live. I do want to remind everybody, very special Arena Challenge is just around the corner. If you haven't registered for it yet, there's a link in the chat, or you can go to the website ninjatrader.com and you can navigate to the registration. It's free for anybody who wants to participate, and this challenge is going to give away $250,000 of cash prizes. Other places will say, well, we're going to give $1 million of rewards. I don't know what a reward is, but $250,000 in cash prizes, which makes this very unique. There's 3 qualifiers there: May 19th, May 26th, and June 2nd. And then 100 traders from those will advance into the final round, which is on the June 9th. And keep in mind, there's going to be prize pools along the way. So whether you're in qualifier 1, 2, or 3, or the final round, there is that opportunity perhaps for those cash prizes. And it's a lot of fun. You get to use the platform, any one of them you want. And it's a good way to kind of get engaged and get some skin in the game, kind of in a free, fun way. So check that out when you get a chance. Looking forward to seeing you guys this afternoon. Remember, 2 o'clock start with Shy Girl, and then Joey, Leo, and Christian are going to be trading the close today. We'll see if we get some movement. It's Thursday. You never know. Having said all that, everybody, thank you so much for the subscriptions and the thumbs up. Relax, have a nice lunch, and we'll see you this afternoon.